Hello everyone, my name is Alan Hunter and I'm the CEO and founder of NRN, the National Renewable Network. And we're building a network to help all Australians transition to solar and battery on their home and businesses. So let's begin. A few years ago, we saw coal prices in Australia move from $40 a metric tonne to over $400 a metric tonne. And with 72% of our electricity still dependent on black coal in New South Wales, my energy bills went up and so did yours. Now we all know there is a solution to move away from dirty electricity, and that's to buy solar and battery for your property. Yet with a $20,000 price tag, most cannot afford it. In fact, it's leaving over 60% of our population in Australia still haven't made the transition to renewable, mostly because of the price tag. And more importantly, the energy sector is also struggling with the non-managed generation that's coming off our rooftops across the country. So we've developed a platform that enhances the energy industry, the solar industry and the consumers together to solve this ongoing problem. So for energy retailers, they're going through the rising costs, which is causing some challenges for them. They go for the grid challenges with too much energy being feed back into our grid during certain times. There's a lot of information about this, but also it's actually impacting their profitability, and they have a lot of profitability concerns at the moment. For consumers, the cost surge is never ending. We saw a 30% increase a few years ago. We're going to see another 10% increase this year. The affordability barrier for consumers to make that next step is sometimes unrealistic for many. And also finance challenges are also an issue. For the solar industry in particular, there's 4,500 solar installers across the country, with intense competition and price pressures driving them to the race to the bottom. They have a very transactional nature business, to which we're seeing a lot of them, unfortunately, not survive through these challenging times. So at NRN, we have developed a platform that links all of these stakeholders together to get to a result where we are enabling consumers to access solar and battery. We're helping solar retailers work together and increase their profitability and sales, meanwhile supporting the energy sector. And let me explain a bit about how we do this. So this is our little flywheel of different stakeholders within our platform. I'm going to start off with the energy retailers. Now we work with energy retailers to develop energy plans that will include solar and battery as part of the energy plan. Imagine your phone plan that includes a phone. It's exactly that. Now from this solution, they're able to increase their profits, they're able to increase their renewable energy portfolio, but also they can de-risk their hedging within the energy market because they can manage electricity immediately from every single home on an aggregated lens. And to date, we've actually rolled out 4 energy plans. And in the background, we've got about 11 energy retailers currently going through the process with us to develop these plans. We've worked with investors to be able to bring funds in to deploy and invest into solar and battery systems. We've deployed over $13 million to date, and it's deriving an attractive return for investors in comparison to solar farms or wind farms that currently on a more of a centralized scale. In terms of solar retailers, they essentially are our workforce. They're the ones speaking to mums and dads, explaining how all this works and trying to get them to get a solar and battery system through an energy plan rather than trying to sell it to them directly. And so far we've got 27 solar retailers. And then lastly is the consumer. We have helped hundreds of customers across the country. I'm just going to move my little face over this side, across the country to access solar and battery on their property for absolutely nothing at all. There's no finance required, there's no no cost at all from day one. But they are saving money. On average, our customers save about $820 per year per customer. And we've helped over 650 customers make this transition so far. So our role in all this is we help develop the customer proposition. We sell and install through our solar retailer partner network. We own and operate the assets on behalf of our investors, and we manage the virtual power plants. So energy retailers can benefit from it, but also we can help them optimize their earnings. So we have a bit of a role to play in the supply chain, and we've really validated the model over the past 12 months. So let's talk about the opportunity that lays ahead of us. The Australian Energy Market Operator launched their ISP, the Integrated System Plan. And their forecast that we're going to see another 72 gigawatts of rooftop solar get installed over the next 25 years, just 3 times more. That's 6.8 million homes between now and 2050. It's going to be about 16 gigawatt of batteries, so 5 times more batteries we're going to see be installed between now and 2050. Yet, under the current status quo, we expect mum and dads to spend $142 billion of their own money to upgrade our energy infrastructure. We don't think that's the right way of doing it. Therefore, we've developed this model that is owned and operated by the energy sector. And that's exactly what we're part of. The total addressable market in Australia is quite significant. And I want to pull your attention to the top right-hand figure, which is limited to the solar installations that we have per year. So there is a maximum of 285,000 solar installations that happen every year in Australia, which is about $6 billion of hardware that could be purchased every year for solar and battery for mums and dads. That's exactly what we're addressing, and we're aiming to be a significant part of that market. So where's the value? I'll talk about 2 lenses. This is the value for a consumer. I want to take your attention to the little chart that we have on the right hand side. Now let's say if you purchase the system, the blue line at the bottom will show you the cash flow position for someone buying a solar and battery system over 10 years. Now you can see that they break even by year 7, or just over 7, and then they're about $12,000 better off by year 10. Still a great proposition, but you're taking a lot of risk for that 7-year period, and you're in negative cash position for quite a while. If you finance it, generally your cost of finance and your repayment cost and your energy bill is greater than what you're spending today. So there's a high chance you'll be going into a negative cash position throughout. And then lastly, with one of our plans that's in market, we'll be able to see an increase of positive cash flow year on year going out to year 10. And these customers are, I guess, cash flow financially better off by not owning an operating system, just meanwhile having a cheaper electricity plan through one of our partner retailers. Now from our partner retailers, let me just explain why they would want to do this. Now if you bought your own solar and battery system, we ran this across 221 sites that have been operating for more than 12 months, and we saw that the average revenue per customer was $1,400 if the customer owned their asset. Yet if the the customer didn't own the asset and it was through NRN, we saw an increase in revenue by 2.5 times. In terms of their gross profit, we also saw the gross profit increase by 53% in comparison to a customer owning their own solar battery. This is very evident to the energy sector that they need to do more than just sitting on their hands and letting customers buy their own assets. So we've developed a technology platform that enables us to install these systems through our solar retail partner network. It is our entire CRM or tech platform that's built that our partners use in the field. We then have an asset management layer that sits on top that lets us manage the assets accordingly and identify if we have any issues throughout. And then lastly, we've also developed an optimization earnings tool where we run many digital twins of all of our sites to be able to optimize the best way to how we can manage this virtual power plant. And that's the feedback we give to our energy retail partners. So in the business today, there's about 23 of us across the company. And here's just some example of some of the teams. And I want to talk to you about our capital raise. So we actually launched a capital raise equity side a few months ago, but we've been working this for the last 4 months. It's a $65 million Series A, which consists of $50 million of senior debt and $15 million of subordinated capital. Now, where we're at today is we went to market about 5 weeks ago in March to raise $5 million of equity and $10 million in subordinated debt. Yet we was 2 times oversubscribed within 5 weeks and we've extended that round now to $10 million, and we're designing a $5 million convertible note, to which this will launch next week. So once we've closed out this Series A, it's going to give us a really clear runway to be able to deploy over $55 million into solar and battery systems over the next 12 to 18 months and get to 3,000 sites deployed and installed across the country. And as you can see from the figures on the right hand side, if I just move my face again, you will see the growth that we experienced last calendar year. And this is exactly what we'll be replicating in the following months to come. So I'd like to invite everyone next week to join us on our live webinar with Wholesale Investor and Steve Torso, and we'll be talking about the upcoming convertible note that's going to be available. And this convertible note has come into play because of the oversubscription we had in equity. Once we've closed this, we'll be able to close the entire round, and we're aiming to have financial close by the end of May. So please do, if you have time, come along and learn a bit more about our business. Thank you so much, and back to yourselves.
Hi, my name's Lang Solberg, and I'm the co-founder of Real-Time Data here in the US. And I'm here to tell you today about our solution, which has been validated by customers in 4 countries, as well as by the Walton family, owners of Walmart, whose investment office invested in us a little over a year ago. This is the crap that fishermen and other frontline workers have to put up with every day, to this very day, in an era of modern technology. The crew's busy on deck, the weather's awful, and the captain is trying to stay profitable, keep everybody safe, and stay compliant in this environment. He has to fill this logbook out on the screen by midnight to stay compliant with the federal government in Alaska fisheries in this example. And imagine trying to juggle all this and stay legal in this environment, especially when you have to handwrite every latitude and longitude on a sheet of paper that's still in use today, like the one on the slide. These are people's livelihoods, and handwriting logbooks and data on the front lines or trying to use Office 365 out there, that doesn't work anymore. And we know that our customers have tried and keep on trying. This is why we've built the Deckhand platform. Our approach is the first in kind for these industries because we've decoupled our core tablet-based application, Deckhand, from the way that it's customized. We do this through use of an integrated development environment, an IDE that we call Catchflow. Deckhand is the chassis, if you picture it like a car. The customization tool, Catchflow, is the way that we, and increasingly third parties and our customers, add the trim and add the bells and whistles. It's how each workflow on the Deckhand platform gets delivered to customers in fisheries and other jurisdictions around the world consistently on the powerful Deckhand platform. More and more corporations are coming to us saying, we have a problem getting data back to headquarters from the front lines, and we're going to build a bespoke application to fix it. We show them Catchflow and we show them the Deckhand platform, and they quickly realize that in addition to saving 30 to 50% of the cost of building a bespoke workflow, they can also deliver a solution that is fully guided and works exactly the way their frontline operations do. Here are a few of our key achievements, ranging from interesting data throughput metrics to getting into verticals that just a couple years ago we weren't even imagining we could. Our approach to technology in these industries that were previously laggard to technology adoption is becoming more proven as these verticals and these industries adopt this type of technology. And here are a few of our customers currently winning using Deckhand, ranging from North America's largest vertically integrated seafood company to another company that's using our Catchflow integrated development environment to build workflows for their customers on the Deckhand platform. These workflows satisfy regulatory mandates. They inform AI models. They contribute to science and research, fly around in spotter planes, and integrate with increasingly advanced hydroacoustic, electronic monitoring, and AI technologies. And all of these customers have one thing in common. They require a tailored solution, unique to their business, built on a platform that works the way their workers do. And it's all built using Catchflow and delivered on the Deckhand platform. Our solution doesn't just work in rugged frontline environments, it excels. We have a user experience that fishermen and other workers can quite literally hit with their elbow to get critical data entered when other critical tasks have to be juggled in harsh operating environments, often when safety is on the line. The workflow approach allows us to stay nimble and evolve quickly to the changing needs of any of our customers. And our team, we're experts in this nexus between primary industries and tech. It's why we get up every day to do what we do. We're not building software for controlled automated environments. We're excited to build software for the uncontrolled rugged environment. These are a few things that people are saying about the platform. And although McKinsey, in as late as 2015, pointed to primary industries as being laggards when it came to digitizing, things are changing. The paradigm has shifted. Our customers are telling us that they need to modernize at all costs to stay compliant and stay competitive in a rapidly changing global landscape, especially in those protein markets and in those primary industries. And we know that this problem, where software has left people behind on the front lines, doesn't just exist where we got started, which is in fishing and maritime. The problem exists across multiple primary industries. For example, we're talking to a customer in our pipeline right now in aquaculture about how their back office solutions work very well, but their farm workers are still using pen and paper or still using Microsoft Excel on a tablet or a smartphone. These things don't work well, they're highly inefficient. We know that people who have good solutions in management and analytics often don't have good solutions that are fully guided, that actually suit the needs out on the front lines themselves. We're a product company, and we're actively engaged in ensuring that our revenue narrative is rooted firmly in annual recurring revenue through a SaaS model, a subscription model. We know that understanding the pain points of various customers and gaining an understanding of where their inefficiencies lie is critical to opening the door for new opportunities. But to truly scale, those sales-led processes don't work, and they're not going to get us to where we need to be. So we're investing heavily in no-touch models where our customers can hit the proverbial buy now button, tailor a workflow to their liking on the Deckhand platform, and go to sea, go to the farm, go out on deck with a solution that's cheaper than building their own workflow from scratch. We've gotten to where we are today based on a few key factors, among them being trust and quality, as evidenced by less than a 1% churn. We've reached these customers historically through the middle sales channel on the slide. Though it is reliant on beating the streets and engaging in that sales-led process, and we're not a software consulting company. The bottom row is also important because marine electronics distributors often find themselves in those remote communities that are adjacent to billion-dollar resources, where data is critical to the sustenance of those resources and the businesses who depend on them. But the top channel is where we're growing now and is the key to healthy annual recurring revenue. It has promising evidence that it is scalable, and this is our vision and where we're placing an increasing amount of resources. Our team is world-class with 14 people in product marketing and sales, and led by myself here in the US, as well as Brendan and Wade, both coming from a company recently acquired. To help us get to the next level, our ask is for at least US $2 million to significantly build sales and marketing capacity for that top channel a couple slides back, that value-added reseller channel. We've reopened the safe note from last year with the same terms, and we plan on using the funds to develop marketing and sales channels to further bootstrap our catch flow go-to-market strategy, gain early trials in adjacent markets, and enhance our tools to ensure that they appeal to a wide cross-section of users. We hope that you will join us, Builders Vision, and our amazing team in taking this company to the next level. Thank you very much.
Good afternoon, everyone. Before taking you through the Good Earth Dairy project, there are two things that I would like to take you through. One is around the infant formula market. The other one is around some fundamentals of milk chemistry to demonstrate the opportunity. So the global dairy industry is worth $1.35 trillion. 110 billion of that is in infant formula, which is expected to grow to approximately 240 billion in 2032. And a major stake of that is the Asia Pacific, having 68% of the market. And of course, China, with over 20 million births a year, taking $24 billion worth of that infant formula sector. Now, this is an important figure here for Australian producers.
Australia has a strong relationship with China, and they have a huge value for our reputation for the integrity and the quality of our powder for infant formula.
Now, to the market gap. The biggest misinformation globally about dairy is I cannot tolerate dairy, therefore I must be lactose intolerant. That's actually false. The biggest intolerance to dairy actually comes from a component within the whey protein of all ruminant milks, including cow milk, which is called beta-lactoglobulin. It's in the whey protein, and it's actually the most prevalent allergen in infant formula. When you give your infant formula to the child, whether it's initially because the mother can't breastfeed or during the interface prior to solids, the milk looks beautiful in the bottle, nice and liquid, and you think, that's it, I'm putting it into my child, he or she is going to be very happy. However, it will hard coagulate in the gut of the infant. Not such an issue if they're 2-year-old plus, but the younger infants will struggle more with the digestibility of the cow milk. Now, just a quick comment on the allergen. There is no cure to the allergen, and it creates inflammation in the child. Now, the solution that the infant formula sector has created for the allergen in the milk is to hydrolyze the milk. It heavily denatures the proteins. It also significantly bitters the flavor. And a lot of infants, even though they have no real choice but to consume it, they still struggle with the feeding, and there's still all sorts of issues in obtaining that infant formula. Now, despite all this, the market is expected to grow from $17 billion to $27 billion to 2032. Now, what are some of the alternatives to cow milk? You've got plant-based, very, very small market. Most of the world does have clear that it's not recommended for any child 6 months or younger. A lot of derivatives in animal milk are just not available in plant-based. And again, it impacts during the process of the actual powder. Soy protein mimics estrogen. There's many reasons why it is just not suitable for infant formula. The other alternative at the moment to cow milk that has had unbelievable growth, especially in China and especially through infant formula, is goat milk. Now, goat milk is molecularly closer to the human breast milk. It has smaller molecules. It's got smaller chains. I don't know if they've done enough marketing, but at the same time, I don't know if they've required to, because it's selling through, especially in places like China. However, it still has that beta-lactoglobulin, it still has that allergen, it still hard coagulates in the gut, and goat milk more than cow milk. Not a great flavor, some resistance in feeding as well. The solution, camel milk. Even though we've had it for thousands of years, the chemistry of the milk has not been well known. Here at Good Earth Dairy at Western Australia, we've been leading the research on that process. It is the only animal milk without that key allergen, that beta-lactoglobulin, and it is recognized as the most hyperallergenic milk for humans. It does not hard coagulate, which is why there's not a lot of cheese made out of camel milk. It also has a neutral flavor, which will eliminate any of that food resistance. On top of that, of course, you've got the molecular structure, the whey casein ratio. There's a lot more to go on about, but the chains, everything makes it more digestible and a superior product from a chemistry perspective as an infant formula. It's also naturally richer in micronutrients for immunity, for our cognitive development and musculoskeletal process. That brings me into Good Earth Dairy. So located about an hour and a half north of Perth, we've been developing technology with $9 million to be the lead producer of camel milk powder.
At Good Earth Dairy, we've adopted a mining-style approach to innovation, starting with a pilot plant to prove and refine our processing technology. This model has enabled us to build scalable, capital-efficient infrastructure, setting us up as a global leader in camel milk production. Thanks to our breakthrough capabilities, and with scale, we can produce camel milk powder at the lowest costs globally without compromising on quality. Recognizing our innovation, the Australian government has awarded us $3.96 million Singaporean dollar grant to support our $20 million project. With this foundation, we project a 29% return on investment based solely on the first growth phase of our commercial rollout. Australia is home to over 1 million feral camels, providing us with a uniquely abundant and untapped livestock source. Our ability to capture and domesticate these camels with virtually no labor costs gives us a natural and economic advantage. Western Australia offers the perfect climate for camel farming, dry, stable, and ideal for animal health and productivity. We also benefit from access to exceptionally low-cost water, feed, and land, reducing our input costs and enhancing profitability. The final and the most important barrier to entry is our proprietary technology and know-how. enabling us to do what no one else globally can do at scale and at such low cost.
Now, you're only as good as your people. We've got capabilities, this is just around on the board level, but from execution to board, with capabilities down to the Camel management, all the way down to having the ex-marketing director of Peters & Browns, which is the most successful dairy company out of Western Australia, who put connoisseur ice cream on the business class of Qantas as a positioning in the market, and has brought his capability into the project. Conscious of the time. Just as a side note, the fresh produce is a huge opportunity as well as you're scaling up for your powder production. Even though cheese is more complex to produce, we have developed the technology to do that, to provide 6 months shelf life. Some gelato and kefirs as well, which if you consume them, you think you're having cow. This is an important factor, that it is aligned to the Western palate. You have our products, you think you're having cow milk products. However, they don't have the allergen, have a lot of that micronutrients, a lot of the peptides that help our immune system, and provide us a huge opportunity as well for the growth. Now, try and rush through the last slides. Our project is an $18 million project. It has backing by the West Australian government to the tune of just shy of $4 million, recognizing our credibility, our capability, and our integrity. This had a Deloitte's due diligence done on it to demonstrate the capacity of the business and the project. It'll be the first infant formula facility in Western Australia, and it will have a capability of $72 million in terms of a first step in our project and intention to grow. We don't only want to have our own infant formula tin and brand, but we also want to be the producer and supplier of powder for other infant formula companies. Now, I don't know how many people here in the room are familiar with the A2 company, but they've had tremendous success, and they're purely on the fact that there is a, not whey, but the casein protein, that there's one variable that's not there that's more inflammatory. However, the most inflammatory component in cow milk is the whey protein, the beta-lactoglobulin. It's still there. It still has it. It also still hard coagulates in the gut. But they've done incredibly well. Why? Great marketing, great market awareness. You know, you have to put the hat out to them. They've done a fantastic job. And as a result, they're already selling over $500 million worth of powder into China and are a leading brand in China already, purely on this micro point of difference. So camel milk chemistry gives you a macro point of difference in so many levels, and there is an unmet at the moment with half the children who consume hydrolyzed milk still struggle to consume it. We're seeking $50 million. We've raised over $10 million historically. And we're seeking $50 million to execute this project through institutional investors as a debt equity mix to build this initial first facility. We're targeting a return on investment of 29% as the first stepping point in this project, which can become a future Fonterra, which are a large cow milk powder producer for other companies. Thank you all for your attention.
Well, thank you very much for having me. Back to Wholesale Investor again. It's very great to be here. I recognise some people in the audience, some investors and some acquaintances from past events. I'd like to start by saying congratulations. Sincerely, congratulations for being here, because if you are in the room, it's likely that you're a wholesale investor, a sophisticated investor, which means that you've accumulated wealth over your career, you've worked hard, you've made some good investments, and now you're looking to invest some cash. So well done. So there's two things we say to our clients who find themselves in that position. Number one, don't lose it. And number two, make it work hard for you. Now, I found myself in the same position. I thought, well, where am I going to put my money, my hard-earned money? I want wealth preservation, capital preservation, and I want it working for me. I thought if I could find a 10% yield, it's like doubling my money, because you're getting more income off the same capital. So we've landed in the motel sector, which is where a lot of people land in Australia when they're looking to preserve their wealth. It's commercial property. So what we've got is a motel fund. We're looking to roll up and consolidate the motel sector in Australia. The motel fund will invest in a diverse group of 50 motels. We'll invest in 10 a year for the next 5 years. The sector is ripe for consolidation. there's many substandard independent operators out there who are looking to offload their investment and looking to retire. So there's quite a succession component to it as well. The consolidation strategy is simple and proven. You know, pubs have been there, storage most recently, marinas, childcare. It's all happened in all of those sectors except for motels. There's 2,500 motels in this country, and no one owns more than 20 or 30 of them. So there's significant upside available because there is those operational improvements, and there's, you know, when you own a motel, you can't do everything. So there's always some centralisation of costs and efficiencies to be gained. So we're able to provide an income yield of 10% because it's a high yielding segment. You can buy these properties for 10 to 12% on the way in. It's a 5-year fund, so we're looking to have a 5-year term and sell the entire portfolio at the end of 5 years. So let me dig into that a little bit. Why motels? Well, it's prime property. Might not be prime Sydney property, but it's prime for Orange or Dubbo or Coffs Harbour or a regional centre. It's on the main street in the middle of town. Road frontage, high cash yield property. The track record of profitable operations is in the assets that we're seeking, and they're usually available at between 10 and 12% for purchase yield. So when you're starting at that sort of yield, it's great. It's easy to go up from there. There are essential service providers in the towns. So these are diverse towns with diverse economies. They house local, you know, visiting health workers, project workers, salespeople, people visiting family and friends. They provide essential services to that local community. And of course, we can get geographic diversification in the portfolio. So the simple strategy is that acquire 50 quality motels. You know, we're talking motels between 30 rooms and up, so not the 10 to 20 room mum and dad motels. They aren't big enough to provide a good investor return. We need adequate scale to provide enough money to hire a professional on-site manager and have money left over to provide that yield. We're targeting towns across Australia with economic diversity, and we're looking for great towns with great infrastructure. Obviously, airstrip, hotel, hospital, and projects going on adds to that. Now, in all of the motels we've looked at and the ones that we're buying, we've noticed that there's always some operational improvements to be had. So we're not looking for turnarounds, we're not looking for complex projects, but there's always something you can do. You know, the person running it is not perfect and not an expert in everything. So you can usually refresh the website, the booking system, do better promotion, have dynamic pricing, and some tightening of operations or reconfiguring of rooms. Of course, the expense optimisation is a big part with centralising things like digital marketing, bookkeeping, procurement and things like that. Really letting the on-site operators get back to what we want them to do is be friendly to their guests, create a warm welcome and a friendly goodbye, rather than having to sit there doing bookkeeping and stuff and taking that task away from them. And then on exit in 5 years' time, by putting a portfolio of 50 diverse assets together, of course, you decrease the risk of that portfolio and you can sell that portfolio for a 7 or 8% yield, which provides that increasing valuation at the end. So our priority is, number one, is to ensure low risk. So that means it's a property-backed asset fund, low LVR, so we want to keep that LVR low. We have resilient operations, we have independent trustee oversight, and we'll exclude high-risk properties like development and turnarounds. We're advised by the best. We have a very efficient and good legal structure in place, very tax efficient. We have a great corporate team looking after fund administration. So a 20% return, now that's a big number, so let me underpin it for you. So when you're stepping in at 10%, you're halfway there. But of course, there's a little bit, 3 to 4% available through operational improvement, 3 to 4% available through inflation protection, inflation of increasing room rates over time, and of course that kick at the end when you can sell the portfolio at a lower yield and a higher valuation. Now, the first couple of properties that we've got, number one is the Motel in Seymour. Now, you wouldn't think, well, why would you be in Seymour? Well, it's right next to the Puckapunyal Army Base. So all the civilians working on base can't stay on the base, so they all stay in Seymour, and this is the best motel in town. It's full Monday to Friday, and then on the weekend it's got travellers coming for the wine region. It's a really well-kept motel. We're picking that up for a purchase yield of 10.5%. It's a really good example of what we're talking about. With the other one being the Wine Vine in the Barossa. Again, a recently refurbished 40-room motel right in Tanunda, in the centre of the Barossa, and again, a really good track record of profitable operation. The other thing that's supporting us at the moment is the market fundamentals, three main components. Three main components is high construction costs, so you have limited supply, and then you have increasing demand coming from increasing overseas arrivals and more people in Australia travelling regionally now that the Australian dollar's low. And the third punchline there is interest rate environment. So we have a decreasing interest rate environment, which is going to keep our interest expenses coming down over the term. There's anecdotes there for growth in the sector, both room rates and forecasts sector growth for the coming years. With looking at other funds and other investment opportunities today, that's what you're here for, is to compare. What we've tried to do here, and what we've successfully done, is to make sure that we've ticked all the boxes in terms of the structure. We've got high income yield, regular distributions, equity upside, we have multi-asset diversification, kept the debt levels low, we have no development or turnaround risk, and we have independent trustee oversight and an AFSL. So they're the things to ask yourself when you're looking at different property funds, whether the funds tick those boxes, and that's what we've done deliberately. As I said, the capital preservation is important to us, and that is what we've delivered. With the management team, we've made sure we've got commercial property experience, 40 years of hospitality, hotel management experience, good financial acumen with our Chief Investment Officer. We're all very passionate about this project. We've got our money in, that's where we're putting it, and that's what we're going to be delivering, as well as an advisory board. The advisory board, again, has amazing commercial property experience. One of the most preeminent hotel operations experts in Australia is on the advisory board. He's here today if you'd like to meet him. And also Oliver has got a track record of rolling up the senior living sector. Now I'll end by saying we're open for investment. We have good, strong investor interest. We're looking to close the first round soon. And thank you very much for your interest, and thanks very much for listening today.
Hi there. My name is Dr. Matthew Jaffarzadeh, and I'm the Director of CosmoInnovations located in Melbourne, Australia. I'm here to present you with a revolutionary personal beauty patent technology called SkinGate. One of the common mistakes that most of us do during normal daily skincare application is transmitting germs from our hands on our skin, or infusing the actual skincare into the palm of our hand before it lands on our face, which is a total waste of the product, as well as rubbing in a different pressure manually the skincare on our face, which can lead to inconsistency of the absorption of the product or active ingredients into our skin. And one of the main reasons that most of us we don't like to go and attend clinics and salons is virtually the prohibitive cost of care, such as the expensive services that they're providing, and that could be a little bit prohibitive to many of us, is that the risk of side effects, scarring, taking time off work, multiple visits to the actual salon, or simply cross-action with other treatments or other medications that we might be on. So we have developed a unique personal beauty technology called SkinGate. This unique device comes with several innovative features, starting from capsule delivery. So SkinGate is the only device that comes with a 15 ml skincare capsule that is getting placed inside the device. So the actual device uses a series of electronic features that can seamlessly work together and push the active ingredients and serum into the deep layer of our skin without the need of manual application or massaging the actual cream or product. So the device comes with several advanced features, such as skin analysis. So by pressing a button, we can easily detect our level of the skin's oil level, moisture level, texture, and vitality. So the numbers, they show up on the screen. And this is just for the user to see what's the condition of the skin in that time. And by pressing a button, we get 0.25 of the cream coming out of the device, which is enough for one side of the face to be treated. By pressing the vitality button, we engage several features such as iron to ferrous galvanic, which is a polarity changing, fast polarity changing of these four plates that constantly, through a special algorithm, it helps the product to be rejected and be pushed into the skin. By using radio frequency heat, we shrink and tighten the skin, so it helps with the minimizing the lines and wrinkles around the eyes, lip, and lifting the skin, as well as using import pulse acoustic vibration. It just keeps pushing the product further into the skin so we can enjoy a very deep hydration. And by using dual wavelength red LED light for collagen stimulation and firming, pores reduction and healing the skin, as well as blue light, which is for reduction of the acne, rosacea, inflammation, we can enjoy a very high-tech device at home without any pain or discomfort, which can virtually cost the fraction in comparing to the attending the clinics. And after the use, another great feature of the device is that it comes with a unique ultraviolet lid that is simply you place it over the head, and by pressing the head, the ultraviolet button, you can enjoy the full sterilization of the head. So there is no risk of cross-contamination or transmitting germs from one person to another. And device can easily be charged over wireless charger docking. So we have developed the personal's daily nourishing moisturizer that comes in various formulas, and right now we have this formula that is registered by us, and we fill it into the capsule. So capsules are not refillable. We did it intentionally to engage customers to use a fresh and sealed product, which doesn't have to sit on shelf for months and months before it's finished. So every 15 ml skincare capsule can last up to 30 applications, which is perfect. And obviously, it's a great recurring revenue that it encourages the users to purchasing new fresh products and formulas. We have done an extensive clinical trial, which you can see a quick glimpse of it. You can see quite a remarkable improvement on the lines around the eyes, the deep folds around the nasolabial fold. You can see before and after 10 minutes use of the device can offer such a great, remarkable improvement. You can see here a big depth into the nasolabial fold and the sagginess around the jowls, and you can see how fresh she looks simply after 10 minutes use of the device, as well as the lines around the eyes, the jowls. You can see quite a big lift, which is something that normally you would pay thousands at normal big high-tech clinics, and obviously those heavy machineries could offer some scabbing and downtime and pain associated, whereas with this device there is zero pain or discomfort. So the great thing about this device is there is no training, so no training is required. It's very simple. You simply can remove the head and insert the capsule. So it's very, very simple. And this is great because if it is used in a beauty salon environment as a B2B, can be really good to upsell the actual treatments, because obviously a pack of 4 capsules can last for 30 each. So that comes with a capsule of 4. So that's for 120 applications at 130 US. So it's quite, which is about $2.70 or $3 per use, which is quite economical. And the device retails at $870, which is again is very competitive in terms of the price that is other devices that currently market. We are very well positioned as opposed to our competitors. There is no device absolutely in the market that would have this capsule delivery, which is similar to our Nestle Nescafe, where you put the capsule of the coffee and you serve your desired coffee flavor. That's how we come up with this approach, where users can enjoy a very deep, nourishing, and firming result without getting their hands involved, and delivering that very accurate dose of the skincare without wasting. Now we are doing something bigger than initial design. So after presenting the technology to 4 major global beauty brands, we have identified a very big demand in other categories. So they have requested if we can use the same features and come up with different approach where we can do other sort of services or therapies. So we have developed a very unique device, which is called SkinGate Pro. So this is the device that I have in my hand. This is a prototype. So SkinGate Pro, as you can see, is just an applicator with multiple heads. So easily you can insert the desired hair or skin capsule into the device, insert it, and in 2 seconds, devices start to function. And once you turn it on, you simply just massage device for 5 minutes on each side of the face, and you can enjoy a very deep rejuvenation. And then by removing the capsule, you can put different heads. For example, this head is designed to offer deep skin cleansing exfoliation through ultrasonic. So it's great to remove all the debris, oil, and blackhead, whitehead from different parts of the face. And this innovative handpiece is designed to offer maximum hair restoration. So the actual hair serum can easily be infused into the scalp by brushing the device in our head. And this has a special 685 nanometer designed for hair restoration. So this does hair restoration as well as hair coloring. So you can easily put the desired hair color, hair dye, and enjoy the hair coloring at home. Device also comes with the ultraviolet that easily gets attached to the head of the device to sterilizing, and sits on a very stylish cordless charging dock to charge the device. So now we are in a much better position because the global market, as you can see, it's very, very large, 107 billion. We're looking at global size with the addressable market by 20 billion by 2030. We have seen an increase of demand in terms of the home beauty tech amongst consumers. We're looking at about 700% increase in users using self-care methods, whether it's hair care or skincare or rejuvenation, which is a great testament for our position in terms of the SkinGate in this very highly in-demand market. We're looking at the different e-commerce and retail model for SkinGate to be sold across globally. The actual technology that we have right now is it's commercially available. It's in the pack, ready to go. So this comes with the CE, FCC, and ROSE certification, which is with soft claim. We can sell this anywhere as a beauty device, whereas the new device that we are working with, the SkinGate Pro, we're going to apply for FDA and submit the 510(k) for acne therapy, hair loss, and wrinkle reduction. We have a secured patent and trademark globally on both utility and design of both SkinGate as well as SkinGate Pro. We are raising 2.6 million USD to fund for the sales and marketing of the SkinGate, as well as commercialization and development of the SkinGate Pro. So this is a great opportunity for investors to contact us. We're looking at a minimum 6-12 times the return on investment. And what happens is that the current device is now available. We just launched it at the International Beauty Expo in Dubai. And we're looking at 7 to 8 months to release the Pro version. So this is the best time, as you can see. We have been working with multiple influencers, and we are very excited about our current stage. We're coming with a very strong background in terms of the commercialization in both medtech and consumer health. Myself, I'm coming from an oral surgery background, and then 30 years experience as a senior laser practitioner in both thermal and non-thermal lasers and light therapy. I'm also a former vice president of the Australian Institute of Laser Therapy. and the CosmoInnovations has been a graduate resident of Johnson & Johnson J Labs Innovation in both Shanghai and Singapore, which we are very proud. Our team are highly experienced with over 75 years combined experience in senior banking, in commercialization, in medtech, biotech, and consumer health. And if you have any questions, please feel free to contact me on the email on the screen, or contact me on 0404 881357. Be with us in this exciting journey, and we look forward to hearing from you. Thank you for your time. Cheers.
Good morning, everyone. Mark Pearce, my name. I'm the CEO and founder at CleverCow, and I'm also the CEO and founder of DIT AgTech. So DIT AgTech has been a customer of Steve's here for many years. We've raised over $7 million from this audiences over the last few years. And CleverCow is a subsidiary company of DIT to solve a problem which is in agriculture. And that is the monetisation of regenerative farming. What CleverCow does is, it's actually the shop front. It's where consumers can buy verified carbon credits produced by sustainable farming through our network of farmers in small fractions on a subscription model. And these particular consumers are buying our credits now because they're environmentally conscious. They want to offset their own emissions footprint. But more importantly, they want to participate and empower our farming communities to continue to grow sustainable food while at the same time adopting sustainable farming practices. So our platform is up and running now. We only purchase carbon credits that have been produced under verified standards, the Vera Gold Standard or the Clean Energy Regulator. All of the credits are also then fractionalised, and using blockchain and tokenisation, we then break these credits down and sell them to consumers in small parcels for only 80 cents a day, but at the same time they're only buying like 80 kilos a month. As you all know, agriculture has a large emissions footprint. And the biggest problem with agriculture is methane from livestock. Now, livestock are very important in our society to produce protein, as you know. But at the same time, it's a problem that needs solving to reduce methane. And at DIT, we actually have the technology now that we've deployed where we're administering methane-reducing additives into the drinking water. And CleverCow then buys these methane credits, fractionalise them, and tokenise them, and we sell them to consumers. Where the farmer may only get $30 a tonne for a carbon credit, CleverCow pays them $100 a tonne, and we sell them to a consumer for between $250 and $300 a tonne. And we capture an arbitrage during that. The reason why we're not getting a lot of sustainable farming adoption is because there's no money to undertake these practices, whereas CleverCow now will enable our farmers to be able to monetise and make some money from it. So how it works. So the DIT ecosystem is there. Most of the methane credits that we produce come from our water dosing technology, where we have a approved Vera project over our platform. So it's as simple as this. A cow or sheep drinks out of the trough. They consume some of these methane additives like the seaweeds, essential oils, Bovair. DIT's agnostic to those. We produce a carbon credit, and these carbon credits are then sold into CleverCow. This is the platform that's working right now. Over 500,000 head of cattle are on our platform at DIT now. And this is the raw reality of ag tech working in the bush. Cattle drinking the water that's got agalin in it, which is an approved methane reduction additive. It's an essential oil. At this point in time, agalin is the only additive in the world that's an approved to reduce carbon or reduce methane and to enable a farmer to produce a carbon credit. This is the platform. This is the tech at play at DIT. The animals are consuming the water, and in the back end here, our software is calculating the emissions reduction per head and producing data sets so they can be audited so that the credits can be issued to the farmer. As you can see here, this particular platform, in the lifetime of this dossier here, has produced 467 tonnes of CO2 credits for that farmer. CleverCow is a really simple way for everyone to participate in climate change, while at the same time it allows consumers to invest back into our healthy food systems. This is the platform. We're selling carbon credits now at CleverCow. We've built the platform. We're onboarding subscribers every day. It's as simple as clicking in, putting your credit card in, and you can start to participate and do something with climate change yourself. So you're probably wondering, how big is the market for this? If you're passionate about being purposeful in your life like I am, and you do the research, there's a very good report there with Deloitte that has just come out. They're forecasting that this industry will be a $100 billion industry by 2030. So already now we are seeing consumers all around the world wanting to participate in climate change and offset their own unavoidable emissions by buying fractions of carbon credits. We're raising up to $1 million in this round in CleverCow. As I said, CleverCow is a subsidiary of DIT. We've set it up specifically as a private company so that people can get in early. It's a seed round. The money will be used to help us to expand our marketing. The tech's built, the product's there. We're starting to create revenue in CleverCow, but this will allow us to market our platform globally around the world. And more importantly, get more consumers so that we can invest back into our farmers to adopt more sustainable farming practices to reduce carbon emissions and actually to absorb carbon from the atmosphere. Thank you.
Thank you. My name is Peter Christie, Chairman and CEO of Activeport Group. For those that aren't aware, Activeport listed on the ASX in 2021. We're a software company. We build enterprise software for telco and data centre. Now, when I present to technical conferences, we tend to talk about the technical advantages of Activeport's product. When I talk at investment conferences, it makes sense to talk about the investment quality of Activeport's product, which is what I'll do today. Having said that, let me give you a bit of an overview of what our software does. Activeport, if you think about the life of an IT manager, which is our end users, and I'm sure you probably don't think about the life of an IT manager, but if you did for a moment, if you were an IT manager running BHP's global network or Commonwealth Bank's national network or Louis Vuitton's chain of retail outlets, you spend a lot of time buying compute capacity and data storage capacity, and then you join those together with a network. And if you're an IT manager today, you can buy compute and storage quite easily. You can go to Amazon's AWS site, you can go to Microsoft's Azure site, you can go to Google Cloud, you can dial up compute and storage very, very quickly. It used to be a lengthy, capital-intense process, but today it's instant. But when you go to buy the network to connect your users to that compute and storage, that's still a very long-winded process. It can take up to 8 weeks to get a network service provisioned in different parts of the world. What our software does is cloud enable those legacy telco and data center networks. So when a telco adopts our software, they can now sell their network services to those IT managers in the same way that that IT manager is now used to buying compute and storage. It becomes a very instant-on experience. And so our software for our telco customers has got a very high utility because we can help them generate more revenue, generate cash faster, reduce churn. It's certainly a customer-facing product for our telco customers. So that's what we do. But if we step back from that for a minute and think about why Activeport is a good software company to invest in, I think it's always worth reflecting on what makes a software company a good investment in the first place. And the things that I always look for, and a lot of investors that I speak to look for, are these three things. A good software company investment has to be selling their product to a very large market. You want to have a deep, broad market that you know you can generate a lot of opportunity from quickly. High ARPU, so average revenue per user. It's very good if the software product generates a lot of revenue per user. It's not essential. There's been some fantastic ASX-listed software companies. Dropsuite is one that comes to mind where their revenue is quite low. Their revenue per user is quite low, maybe $3 instead of $50,000. But typically, the lower the ARPU, the longer it takes to get to profitability and the more capital it requires to get there. And so a high ARPU software business makes a better investment, in my view. And then recurring revenue. We obviously want to invest in a company that doesn't have to get up every day and go spend money finding a new customer. We want to make sure that we've got solid recurring revenue. And in that context, if I look at Activeport, we definitely deliver. Activeport's target addressable market of telco and data centres is around $4 trillion. Now that's obviously a lot of infrastructure in there, but people ask me how much of that is licensable revenue for Activeport, and the answer is about $360 billion. So there is a significant target addressable market for us in that space. And the customers for us are all the major telcos that you would know, people like Singtel, Telekom Malaysia, Reliance Jio, Telstra. They're the sorts of customers that are in that sector. Our revenue per customer is in excess of $2 million per year. Obviously not all our customers are in that category, that is the high end, but we have a range of businesses buying our products. Some spend $10,000 to $20,000 a month, some spend $100,000 to $200,000 a month. So certainly a high revenue per customer or a high ARPU business. And then when we think about recurring revenue, our customers, once they're using our product and they're using it to be the primary front-end revenue earner for their business, it's a very sticky software proposition for us. Our customers typically look to us as a long-term partner in their business, certainly more than 10 years. So across those three factors of a large target addressable market, high ARPU, and solid recurring revenue, I think Activeport as an investment delivers in all those categories. But then it comes to why Activeport and why now. There are plenty of software companies on the ASX. Activeport itself has been there since late 2021. Why would you invest in Activeport today? And I think you can classify that into three different categories, and that is risk, competition, and timing. You would invest in Activeport today because we're being successful across these three categories, and let me drill into that a little bit quickly. In terms of risk, any tech company that's a startup, and Activeport was certainly a startup. When we listed on the ASX in October 2021, we had no software revenue, and we scaled that very quickly to $6 million a year in software revenue. So we definitely classify ourselves as a startup. And like any startup, you have to go through a process of de-risking the business as you raise funds. And we've been successful in doing that. Our product now, after 4 or 5 years of very, very intense development, is broad and deep. We have a perfect fit for the market we're chasing. So we've certainly de-risked the product. And then when we talk about product market fit, we in the early days, we experimented with different channels to market, and we certainly found that product market fit in the global telco sector and certainly in the data center sector. So our product market fit is perfect. Financial de-risking, I've got some information later on our balance sheet. I think we've spent a lot of time the last year and a half making sure our balance sheet is sound, and so I think we've de-risked the financial side of the business quite successfully. And then team. We've had to make sure we get the right people in place, and I think from around July or August this year we've achieved that. We now have the right size team with the right skills, and we're starting to move some of those people into different parts of the world to make sure we've got the right people in the right location as well. So we've certainly spent a lot of time making sure that we've got the right team. And so where we're at today in terms of our risk profile, we're scaling the business. We've dealt with our product, we've got our market fit, we've got a sound balance sheet, we've got the right people in the right place, and now we're really focused on scaling the business up. And so out of the three factors of why Activeport and why now, risk is one. The second one to think about is competition. If you're going to invest in a software company, you want to invest in a software company that is ahead of the competition. And I think we certainly tick that box. Across our three product sectors or license revenue sectors of software as a service, enterprise licensing to telco and data centres, and our hidden gem, our GPU orchestration business, we certainly have what a lot of investors refer to as a moat, or we are building a strong moat in at least two of those sectors. How do we know that? When we bid for tenders, RFPs, RFIs in the major telcos around the world today, we typically find we're the only vendor. The last RFP that we bid for, we were the only vendor. The customer had to ask other vendors to bid to make the process look a little bit more competitive. And so if as an indicator of competitive advantage in a market like ours, the fact that we are one of the few products in the market globally that can do what we do for a global telco or a data center operator today, I think is a fair indication that we're competitive and we're building moats. And then the third factor of why Activeport, why now, is timing. One thing that we have had is fairly lumpy revenue for the last 3 years, and a lot of analysts say to me, well, we're trying to understand what the underlying recurring revenue looks like. And I think this half-year result in the last 2 quarters has started to highlight what that looks like. You can see here that our recurring revenue in FY24 is $11.7 million. The numbers we put out today show 5.3 as recurring revenue. Whether it's a blessing or a curse, we have some large one-time license revenue deals that we've booked over the years. It seems every year we've done at least one. This year is no different. We have a one-time license revenue deal that we haven't booked yet because it's conditional of $4 million. So our total revenue at the moment is looking at 9.3, and we've got half a year to go. What I really like about this, though, is as we've been shedding some of our legacy lower margin revenue and focusing on our software revenue as our GP is going up. So GP is up from 54% to 67%, and it will continue to grow into the high 70s, perhaps into the 80s as we add more software license revenue and less services revenue. One thing about some of these one-time license deals or any of our license revenue, there's almost no COGS attached to our license revenue. So when we book a $4 million deal, the $4 million of cash goes straight to the bottom line for us. That particular deal, if it closes in the year, is actually $6.2 million in net cash to Activeport. So I think from the financials, in terms of timing, you can see now that our recurring revenue is starting to shine through. It's good revenue with high GP. We're still booking the one-off license deals, which is the cream for us. And we have a lot of potential new revenue coming through in the AI market from our GPU orchestration product. What I'm particularly happy with is the bottom line there, the debt line. At some point in the last 3 years, we had $4.8 million of debt on our balance sheet, and some analysts were a little bit concerned about that. It was what I would call safe debt, but it was important that we cleared that. We're down to $1 million as of the end of the half. And we don't intend taking on any new debt, and so we've got a very clean balance sheet. And of course, if we book these one-time deals, will be the reverse of debt. We'll have a very significant positive cash balance, which will give us the war chest we need to really scale the business quickly. So in terms of why Activeport, why now? We've de-risked the business. We've got a very competitive position in the global telco market, which is very deep. A very broad opportunity for us, and our balance sheet is looking very, very strong. So the opportunity for us in the next half and going forward is this. We really want to get to a recurring revenue base above our cost base. We need to add another $500,000 of recurring revenue per month to achieve that. We think we can get there this year. And the metrics demonstrate that that's achievable. With our current average revenue per user at around $50,000 a month, we have a pipeline of 2,000 prospects around the world. We're dealing with some of the major telcos at the moment in regions, so Telecom Malaysia, Singtel, Bharti Airtel, Lightstorm, a raft of telcos through India, through Southeast Asia and through the Middle East, and we'll broaden our reach out into Europe and the US as soon as we can. But from that 2,000 prospects in our pipeline generating the revenue we need to get our recurring revenue above our cost base, is imminently achievable. And of course, we have leading technology. We have some fantastic technology. We have some brilliant products coming through that will accelerate the revenue growth. And so I think we're in a very strong position to be very, very successful in 2025 and beyond. That is it. Thank you very much. We have a table out today, so if anybody has any questions, we'll be out there for the afternoon. It'd be fantastic to talk to you. Thank you.
Thank you very much. Great to be here. Probably the most diverse presentation, I think, today. So I would like to begin by introducing you to Jane. Jane's 17. She's actually just about to start university. But not long after her birth, she was diagnosed with one of the most common childhood neurological conditions, hydrocephalus. We often call it water on the brain. It's characterized by too much fluid being produced around the spaces in the brain, and it must be fixed by placing a tube, a shunt, to drain that excess fluid down to the stomach. If it isn't, this procedure is not done, it is universally fatal. So, the problem is that Jane's parents were told that this is life-saving. So her young baby, when she was just after being born, she was diagnosed with this, they did the surgery, but then this surgeon said, the bad news is that this tube, this shunt that's draining that fluid, has the worst failure rate of any medical device. 50% of these shunts will fail in 2 years, 100% in 5 years. Now that means that her parents knew at that point, it's a train crash that's going to happen, but you never know when. Their lives were changed. So she's had periods, long periods, up to a month in hospital at a time. Total of 6 months of her short life has been in hospital. So what's going on? When this shunt begins to fail and not stops draining the fluid, pressure rises in the brain. And the most common symptom for pressure rising is a headache. It might be irritability, it might be energy loss, it might be vomiting. Now, those are all terribly common occurrences in young children. So, the surgeon said, yes, it has a very high failure rate. Yes, the way you'll be able to tell is she'll get a headache or she'll vomit. So her poor parents would endlessly take her to hospital, just as any parent would. Turn up at any hour of the day or night. Now, they live 3 hours from the nearest neurosurgical hospital. They'd get there, she'd be admitted for a day, up to 10 days at a time. She might have a CT or an MRI scan to try and figure out what's going on. Has that shunt, that tube, stopped working and is no longer draining the fluid and pressure is rising in her brain? But in fact, most of the time it was a false alarm. She's had 15 times where she's been hospitalized for a period, all the scans, and it's turned out to be a false alarm. She's also had periods where they've monitored, drilled a hole in her head because they really can't decide, and they say, well, we've got to measure the pressure directly. So this is the paradigm of care for people like Jane and others around the world. Healthcare is reactive. It is not looking ahead. It is not measuring. It's relying on those nondescript symptoms of headache. So it leads to poor outcomes. People wait at home and eventually go to hospital. And it's expensive. False alarms are expensive. Kitea Health is about a proactive care solution for people like Jane. We know that if we can monitor the physiology accurately, we can catch these changes occur, not rely on symptoms, and that reduces costs and improves outcomes for people like her. So what is it about? We are an implantable medical device company. We have developed the world's first brain implant that measures pressure. It's also the world's smallest brain implant. We measure pressure in the brain. Now, I'm talking particularly about the brain, but our same core platform technology is applicable throughout the body and the heart and other areas as well. But hydrocephalus is our first clinical indication. So, you might think that's a really rare disease, isn't it? I don't know anyone that's got that. And indeed, you can live a normal life expectancy. but 1 million people live with this condition in the US. It is lifelong. You are a lifelong patient with this condition that must be managed with this shunt. And you know that there will be failures. 2/3 of the time people are coming to hospital, it turns out to be a false alarm. There's cost, and that's where we can really reduce it. You might still say that's a very small market, only 1 million people. It's a $2 million serviceable market in the US alone. And if you still think that's a small number, we can service the same number of patients as the cochlear device that's currently used for treating hearing loss. So we have that market cap in mind. We want to be the next cochlear device company in scale. So what is it about? We have an implanted device that is placed in the brain at the same time a shunt tube is placed. So it's not a special surgery, don't get that in mind, that it's very complicated. It's 5 minutes of extra surgery time, only 5 minutes. It's energized externally by a wand the patient takes home, because the whole idea is we want to allow home-based care rather than them having to go to hospital. The information goes from the wand to the app running on their phone and then on to the hospital, where the physician can be remote and still get that information. So you might think that's really sci-fi. Wow, that's out there. No, we're a University of Auckland spin-out company. We have 15 years of research experience in this space. I'm a neuroscientist by training. This has been my research area for over 20 years. How is pressure control? We have raised over 15 million of non-diluting grant funding that set us in train all the initial development. We went through all of the animal trials, all the safety testing, all the compatibility. That is all done, and we are in clinical trial. So this is one of our patients, Josh. He's at home in his bedroom. The first time in the world he is able to take his own brain pressure measurements. Instead of relying on a headache that he does get regularly, mostly through dehydration, as mother tells me, instead of doing that, he knows when he should go to hospital now because the physicians and himself have actionable data. So we're doing a pre-Series A round. We're raising about 10 million. We have commitments already of 7 million. We have a term sheet, a subscription agreement is all done. We have a range of lead investors, venture capital firms that are on board, including some impact funds. And the funding will be used to run a larger scale pivotal trial. So we've finished the adult section of the trial. We are enrolling children. We're going to be running a US trial. We are targeting initially US regulatory approval before backing into approval in Australia. So this is the main pathway for us. So why Kitea? We are a novel medical device. There are no predicates in the market for this. This means that we can own that sector. It is servicing an unmet clinical need. There is no technology that enables brain pressure to be monitored for patients in their own home. It's a game changer for neurosurgeons. We are a team that is very experienced, 25 years of experience in medtech, a number of exits and myself, and we are in clinical trials. So our risk profile is massively reduced. Safety is all done, all looking good. We're on a clear pathway for regulatory approval with the FDA. We meet monthly with them. We are targeting FDA approval within 2 years and looking at an acquisition not long after that. That's our target. From our seed round, internal rate of return 200%, previous investors. We are offering a direct ownership in our company to help us grow, to help us get this to market. We're targeting absolutely economic returns, financial returns to investors, but also we are totally focused on making a difference for children and adults. Thank you.
All right. I think Creek Partners is a logical next presentation to Charles' really exciting overview of the Southeast Asian markets because we focus on the Indian VC market. So good morning, everyone. I'm Akshay Chakrapani. I'm a GP at Creek Partners. And I'm very excited to talk to you about an extraordinary opportunity, connecting Australian wealth with Indian innovation. We believe in building bridges, in fostering growth, and in creating a future where Australian investors are actively participating in India's growth journey. Creek Partners is not just another investment firm, and let me explain what I mean by that. It's two Indian immigrants who came to Australia, had successful careers, got married, had children, became proud Aussie citizens. And so we have lived in the shoes of both worlds, and that unique perspective is at the heart of what we do. I've known my partner, Chirag, for about 6 years. We've got children of the same age, shared values, and one of our many discussions we were discussing, how do you create a situation where our professional outcomes are more closely tied to our personal values and ambitions? Because we understand the cultural landscape in India quite intimately and the dynamism that is required for an entrepreneur to succeed. We also understand the Australian regulatory environment deeply. So on the one hand, you have a country with a lot of promise and potential requiring investment. And on the other hand, you have Australia, a country with a substantial capital base seeking high quality investments. And I'm paraphrasing the great Warren Buffett when I say this. He said, understanding the local culture is crucial for success when investing in foreign markets. We are that understanding. India is more than just a number, and you're all sophisticated investors, so I'll be very brief. It's the 5th largest economy in the world, on track to surpass Japan very shortly, grew at 6.3% last year with aspirations to grow between 8 and 10%. The gross national income per capita in India is $2,500, and it's expected to touch $6,500 by 2030. India's rank in ease of doing business is 63. And we mentioned that to someone yesterday and they had a laugh. But that's a remarkable feat when you know that just 3 years prior, India was ranked 130. 1.5 billion people. I think everyone is aware of that fact. But what is the nuance in that data point that we would like for you to take away? That there are 960 million people in the working age bracket. So that demographic dividend is really fueling India's growth. But you need something to occupy that many people, provide employment. You also need a platform to bring to life the aspirations of the entrepreneurial Indian. And so, cue the Indian VC ecosystem. It's the 3rd largest VC ecosystem in the world and the 2nd fastest growing VC ecosystem in the world. Any serious investor needs to take note. Let's look at some innovation that's happening. Let's add a bit of color to this presentation. Exhibit 1, this is a company, Blue Jay Aero. So they have developed a hydrogen electric propulsion system for vertical takeoff and landing aircrafts. Their primary focus is regional travel, regional delivery of cargo. And they do all of this with 0 emissions because their engines are all hydrogen electric based. Exhibit 2, space tech. This is really exciting. The first rocket that you see is Agnikul. They're providing customized launch solutions for nano and microsatellites for insertion into low Earth orbit. Their competitor, Skyro, that's the blue rocket right at the very end, they cheekily submit on their website that launching satellites should be as easy as booking an Uber. And the satellite right next to that is Pixel. Pixel provides hyperspectral imagery solutions, so use cases like mineral prospecting, illegal mining, pest control, vegetation, energy, climate, a vast array of use cases. Exhibit 3, FinTech. Okay, before I get to the lady with the tomatoes, I'd like to talk about the UPI, or the Unified Payments Interface. And I know a lot of you have probably heard of it, just for the benefit of those who haven't. UPI is India's answer to Visa, MasterCard, Amex. So it's a payments network, effectively, but just with lower fees. In 2024, the UPI handled $2.9 trillion worth of transactions, and the transaction volume clipped 140 trillion. That's really, really amazing, just given the fact that the UPI was launched only 7 years ago. So coming back to that lady, you come out of your house, you rock up to her store, buy some tomatoes, and you scan the QR code that's stuck behind the weighing scale, which ironically is not digital, and you're on your way. So you don't even need a point of sale machine that allows her to transact seamlessly. And what's more marvelous about the UPI is that it has provided for financial inclusion. Because now she has access to banking channels, microcredit, insurance products, what have you. And this is what we hear when we speak to a lot of the venture capital firms that we interact with in India. They often say, you build for India, you solve for the world. And this is, I think, an example of what they're trying to get at, is you build world-class solution at a fraction of the cost and make it accessible for all. Look, in the interest of time, we haven't touched upon the raft of AI companies that are proliferating across India. We haven't spoken about the not-so-glamorous but equally promising vertical SaaS companies, marketplaces, consumer, material science, deep tech. There's so much more. And if you're still with me, you're probably wondering, yeah, mate, that all looks nice. So how do you know which VC firm? And that is where we come in. Because we spent the last couple of years researching and monitoring and tracking the VC firms. And at last count, there are 150 domestic VC firms in India and a further 40 to 50 international VC firms that are operating there. So how do you know? How do you know which VC firm is adept at identifying those early disruptors? How do you know which VC firm is adding value to the companies across their journey? Crucially, how do you know which VC firms have a deliberate strategy around liquidity for their LPs? So what is our vision? Our vision is for Australian wealth to own meaningful stakes in some of the most valuable companies to emerge from India tomorrow. How are we going to do that? Thanks. How are we going to do that? We're going to do that by securing co-investment rights in the VC firms that we partner with, that we invest into. Because in the fullness of time, the best companies is where we will want to participate directly and own those meaningful stakes. And remember, these companies are the likeliest to IPO in the shortest time frame, right? They're in the best of health. And so what I'd like to say is that come talk to us. Let's create a future where everyone benefits. We'd love to share what we've learned, what we're observing along the way, and share what we've learned. So thank you. India's time is now. We're very excited about this opportunity, and Creek Partners is here to guide you.
All right, welcome everybody. My name is Greg Harmon, and I'm the guy who brought all these wonderful animation productions to screen over the last decade. For your children, your grandchildren, working closely with Marvel Animation, running an animation studio in New Zealand, closely with some of these key people on the side here, the late Stan Lee, Court Lane at the top there, and Dan Buckley. We know one or two things about making animation and making content. We produced 18 TV series. We analysed a lot of scripts, 700 plus, and we made a lot of content, a lot of footage. In 2020, as COVID spread through the world, we pivoted. We decided that there was an opportunity to shift into AI, shift into a platform for filmmaking. When I say filmmaking, I mean television, I mean filmmaking, I mean content production that's scripted. So we produced a platform called Scriptsee. Now the problem that we're solving here is currently we're disrupting a very manual process. It's expensive, it's slow, it's labor intensive, and it's very subjective. What happens is that leads to delays, budget overruns, all these sorts of inefficiencies in the production. That's high risk and sometimes low reward. The solution is an automated platform like Scriptsee. Within 1 to 5 minutes, I can take a task that took 1 to 5 weeks and turn it around. I'm faster than anybody else out there. We've got much more better planning now because of the tool. We de-risk the production because we can show insights early that matter to the filmmakers, and we can unlock the creative potential. To put that into perspective, just to help you understand this a bit more, here we've got Avatar, the feature film. And one of our core strengths is emotional analysis of the story. So any show that you watch, that you like, is because you're emotionally attached to it. If you don't have that, you won't come back, you won't watch it again. What you see here, if you're looking at this on the timeline, you've got the whole show that's predicted. You've got 8 different emotions on the vertical axis. You can see at the end of Act 2, most productions are in 3 acts, 1, 2, 3. We can see there's a whole lot of anger and duress, go and save the day. If you're looking closely to that very start of the film, it starts, actually pretty hard to see, but it starts in the blue line of sadness. That elicits an angry response at the bottom, and then very quickly James Cameron's got joy, got the audience back on side. If you want to go to another algorithm that we have, this is complexity analysis. So it costs money to have effects, for example, which is what this is showing. We can pinpoint exactly where that is before you've gone and made it. We can help, therefore, not only with the creative, we're helping the other very important team, the finance. How much is this going to cost to make? And there's always a debate between those two sides. Our market is large. It has plateaued off on the top there. The TAM is about 250 billion. The reason it's plateauing off, though, is it's getting smarter. This is the spend. We don't need to have as many people in the process. We're optimizing the process. Our SAM is based on software that we see being used in the space. Studios are shifting to AI technology. It's happening. We're part of that. If you go to IMDb, there's about 35,000 registered films and television shows per year. We see 3 times that number easily in development, so we see the market at about 100,000 films or television productions at any one time in development trying to get made. We can tap into that. We can also extend our market into publishing and games and even music in the future. You can see up on the screen here, this is me running around the world. Product market fit. We launched the product in October 23. So we've been out there for a while now, and the last 18 months has all been about getting traction in that market space. I get up on stage, I talk at all the key entertainment markets around the world about the platform, how it's helping, how it's changing. We had some great engagement. For example, I've got a couple of quotes on here which you can see. You know, Bill Balu from DreamWorks, Greg, you have found a really good use case for AI. Right? That was great. He's not using it, but it was great to hear he said that. Just coming in just recently, this is 2 days ago. This is from BBC Studios, how we're saving their time. We're basically turning their process on its end overnight. They've only been testing in the product since middle of January. So where we're at right now, our roadmap, as I said, we started in 2020. In 23, we launched, an MVP. We spent the last 18 months improving that MVP, making it commercial. Now the product is as simple as you go to find our websites, you log on, you put in your credit card details, you put in your script, and happy days, start analyzing your story. What we need from here on is to scale. We've tested the market, we've got that fit, we need to keep growing the product. So we've got a scaling and adoption coming up right now in 2025, and then keep taking this product wider. There is a little bit of competition out there, but not much. We're leading in a lot of spaces, and no one's really doing what we're doing. We've got a platform that opens up, it looks inside the script, and it helps you make decisions. Largo next to us, they do it differently. They try, based on your actors, based on your cast, based on your writing team and your production studios, and the market itself, try and predict if you're going to be successful. We're not doing that. We're trying to give you the framework so that you can be successful, give you the tools to become successful. And the rest of the products on this list here are manual, database-driven systems, not automated. We've got 2 pricing strategies. Pay-as-you-go is just like a bus pass, get 5 tokens, and clip the ticket or the token as you go. That helps people get into the product, but that's not where we make any money. So it's a SaaS model, production by production at the moment. The ongoing productions, television series are a great example of that. They go for years and years and years perhaps, and every month you're paying a fee. The high-end productions here are $2,500 per month. We haven't built that part of the platform. That's where we need your help. You can see we've got a nice, good hockey stick here, but I think the key part here to understand is that it's very low operating costs. We can process that script extremely quickly, very cost effectively. We're using Amazon AWS. Come and talk to us about that. It's high scalability, high growth. It's changing the process from a manual process to an automated process. You won't go back. Why would you go back and do it manually for 5 weeks once you taste this? We're proven. We're industry folk. You can see my credentials from working with Marvel over the years, and therefore we've been able to bring to our team some key people. I'd like to say on the top here, Gary Morenzi is one of our key advisors. Gary was the ex-president of international television for MGM and also Paramount Pictures. As well as Lydia, IDW Entertainment, a couple of key advisors there in Hollywood that are helping us navigate through that. So the investment opportunity is that we're raising New Zealand 2.5 mil. We've got an open term sheet that we're in negotiation of right now. We need to scale. The reason you're investing in us is that this is exactly what this conference is about. Exponential era. Things that go fast in this space now. So there's a real opportunity here for 10x or more in terms of the company. I'll just leave you this one last thought from this magical guy. To make a great film, you need 3 things: the script, the script, and the script. Thank you very much. Come and see me.
G'day everyone, my name is Dave Cummins and I'm from Future Property Group. A few years ago, I was actually in the Maldives and surfing these big waves at a surf break called Ninjas. With Ninjas, I actually popped up, jumped on the wave, and actually felt like I was flying. And then I realized I wasn't actually flying, I was more falling head first down the wave of a 5-meter swell into the coral bed below. How long does it take to fall 5 meters? It is just about enough time to realize that this is really, really going to hurt. My board snapped, my leg rope broke, and in the chaos of the ocean, I was tossed around like a rag doll, continuously being ripped apart by the coral and pierced by sea urchins. Now, normally in this situation, you'll just wait a second or two for the board to start floating you to the surface, guiding you back towards oxygen. But in this case, with no board, I was actually being flowed forwards and backwards underneath the water. I could feel my leg being caught, but I couldn't actually work out what was happening. And then when I actually needed to reach oxygen, I literally couldn't breathe. It was then that I realized that I was actually being stuck under the rocks below by a Velcro strap. So then I quickly released the strap, shot up to the water, and then I actually got to breathe for the first time. There I was spat out to a nearby ocean, and this is true. It took my friends about 90 minutes for them to realize that I was actually missing. So as I was stuck on this random island in the middle of the Maldives, catching my breath, being torn apart by the coral bed below, it took me time to actually look and explore the island. There, I discovered that I was actually surrounded by huts and a village that were actually made from bamboo. They had leaves for arm roofs, and they had independent water systems. It was there that I realized how Indigenous communities and how communities from the past and the present could actually help our future. I've been working in the construction and the development industry for over 20 years. My last job was the National Director of Construction and Development with over 40 sites and 60 projects. I had a team of over 300 people to help manage about $1.5 billion worth of work. Now, in that last 20 years, one thing I do know for sure that is if you rush, there is risk, and if you plan, it is perfect. If I had planned my surf that day, I wouldn't have had a near-death experience. And although I am grateful for that, for what has happened subsequently, if you plan, you can actually make great results. And we've been working on this for the last 2.5 years. Over the last 20 years, I've been painfully witnessed how the construction and property industry contribute to nearly 40% of global CO2 emissions. The way we build, power, and maintain properties today is simply unsustainable for tomorrow. But what instead of a building could be actually part of the problem and actually be part of the solution? At Future Property Group, we have spent the last 2.5 years asking this question and helped come up with a revolutionary concept called nature positive design. Our vision is simple yet transformative. Homes that do more than just protect you, but also heal the environment through all stages of development. We are currently in the design phase where we have incorporated internal and external green walls, a biosolar roof, and independent water systems. that not only enhance aesthetics, but improve indoor air quality and rejuvenate surrounding ecosystems and enhance heating and cooling loads. Our calculations are predicting that for every 30 eco-lodges we build, we can eliminate the carbon emissions equivalent to 96 return flights from Sydney to LA. This is equivalent to saving approximately 5,000 mature trees per year per site. Our eco-lodges won't just benefit the environment, low operational costs, but also offer a huge investment opportunity where 9 out of 10 homeowners prefer to purchase homes with energy efficient features to help lower operational costs. One such couple is Miles and Jenny, owners of multiple caravan parks in South Australia, where the largest site is home to the prototype of Gawler Caravan Park. You can see the study here where we will eventually analyze a green building versus a non-green building or a traditional build. It makes sense for us to focus on the caravan park sector first, as the sector has already embraced prefabricated homes. But the main difference between us and our competitors is that we are prioritizing sustainability, research, and innovation to help one of the least innovative sectors embrace new technologies. Having spent a fair bit of time with Miles and Jenny, the biggest pain point they have is peak demand charges. With ongoing electrical bills, they spend approximately $12,000 to $15,000 a month on electricity. If you're not familiar with peak demand, it is similar to a car registration. Whether you drive your car every day or just one day a year, you still have to pay for your car to be registered. Peak demand is exactly the same. Whether you're using peak demand just for a few weeks a year, which for us would be summer, or not using it at all, or just using it for every day or just a few weeks a year, you still have to pay peak demand charges. Miles and Jenny will be hit with $12,000 to $15,000 per month to be connected to this grid. So how do we reduce the operational cost of a commercial building and reduce Miles and Jenny's demand for peak demand? After being told by many specialists that it was impossible, I feel like I was being held underwater again by my leg rope, struggling to breathe and find a solution. But just a simple Velcro strap removal helped me come up with a solution. After lots and lots of research, we have actually now come up with and created a world-first energy system that is able to allow people to live without being connected to the grid and with no more electricity cost. Our new electricity system eliminates the need for Miles and Jenny to be connected to the grid, and with a 25-year warranty, not only does it increase the property their value, but they will save approximately 300 tonnes of carbon per year per site. Our service offerings are smart, sustainable, and scalable. Today, I'm here to invite people to join us on an amazing adventure. We're currently seeking $600,000 in investment, not just as capital, but as a partnership. The partnership and funding will help us to complete our prototypes, which we anticipate to finish late in 2025, and we'll also be partnered with the University of Technology, Sydney, to help launch a 12-month study. Professor Sarah Wilkinson, who is globally recognised, works for the World Health Organization, state and federal government, and will help actually be creating nature positive design developments and regulations for all these industries. From there, we have already got connections to about 14% of caravan park owners in South Australia. With over 2,000 caravan parks across Australia, we're confident that we will have a strong market opportunity. We're then targeting a competitive sale price of about approximately $150,000 per unit, with a projected profit margin of 10 to 15%. Under this model, the return on investment is expected to be within 2 years. We have already had interest from other sectors, including mining, residential, and government, and we will expand these to other sectors once we have completed our prototype study. Our financial model and our financial team have run several models and predict that we'll have a company valuation of approximately $1 billion within the next decade, which is achievable, and our new partner KPMG have confirmed this. There is a famous quote, "You cannot stop the swell, but you can learn how to surf." After that wipeout at Ninjas that day, my friends and I went out again the next day. This time we had done our research, planned our takeoffs, and looked after each other. Future Property Group now has a diverse team of approximately 50 industry experts, and unlike my friends that day in the Maldives, we continue to look after each other, have regular check-ins, and have created a circle of trust and psychological safe environment where we can get the best out of our team. Thank you for your time. I look forward to meeting you and anyone else who would like to help ride a big wave with us towards success. and discuss how we can partner with you to help build a more sustainable future today. Thank you.
Hi everyone, Jeff Gall is my name. I'm the founder of ChatESG, your AI-powered ESG advisor. But let's start with what is ESG. It's environmental, social, and governance. It refers to the non-financial factors that influence a company's long-term performance, resilience, and impact. It includes aspects such as environmental, climate impact, energy, water, waste, and so on. Under the social pillar, it looks at employee well-being, supply chain practices, community impact. And under G for governance, it looks at board oversight, risk management, and transparency. ChatESG sets out to democratize ESG expert. We want to make ESG simple, fast, and accessible for all businesses, regardless of their size and location. During our 3 years of research, we understood some ESG challenges from our business customers, including complexity and fragmentation. They have limited knowledge on ESG topics, and they certainly don't have large teams or resources. There's a lot of demand around supply chain transparency now coming from their big customers, and of course, assessing modern slavery risks. There's also risks around greenwashing and lack of ESG credibility. The traditional consulting approach has been slow and expensive and is not scalable. So introducing ChatESG, what we've created is an AI-powered platform driven with on-demand ESG intelligence and a team of AI agents. This streamlines ESG compliance, it simplifies supply chain compliance, and enables trusted ESG outcomes. And from a business perspective, it enables us to scale rapidly and globally in ESG advisory, not relying on the heavy people count. What's different with ChatESG? We have developed our own proprietary system built on the foundations of the large language models such as ChatGPT and natural language processing. We've also added a library of a retrieval augmented generation of documentation specific around ESG. We've then created a very similar and user-friendly experience. And a key point of difference is we add a customer's business context and data. This is a quick, simple demo of what the interface looks like. The key difference here is what we are doing is capturing a lot of the business's context and data, and that makes the outputs and the outcomes far more tailored. This is something that the LLMs don't do. In addition to capturing the business's own information, in the back end, we're then able to align that with the types of compliance regulatory aspects that they might need to comply with within their country. And you can see how quick it is here. We're looking at a modern slavery example. And because we're given the business context, it's able to produce something that is hyper-tailored for this business and means that they would be compliant. Here in Australia, we're also looking at the Australian Modern Slavery Act, and so making sure that the business is compliant with that. Our AI agents are quite unique. We've developed these from the ground up, and depending on what activity the business is taking in looking at strategy, you might apply the partner director role. That happens automatically in the background. If you're doing ESG data analysis, it may be the junior consultant or the business analyst expert. We've had fantastic traction. We've spent since 2020 to 2023 working with 2 key consulting companies around ESG on live clients using our AI solution. We then established our own brand, ChatESG, in January 2024, and we've developed a significant proof of concept. We have secured AIM as a strategic client, developed our MVP scope using our AI agents, and we're now at a pre-seed raise to finish off our MVP and go to market. Here we are on the roadmap where we're right at the investment stage. Significant market drivers for ESG globally, fantastic growth rates on ESG as well as AI, and we're able to maximize and leverage the convergence of those two. Significant markets globally, a $24 billion a year market in the SME space. Drilling that down to a serviceable, addressable market, around 16.4 million businesses need ESG. And looking at our target market or share of market, around 2 million SMEs is around $1 billion per year. 3 key revenue streams. We're looking at targeting initially more the medium enterprises in the SME market, but we realize SMEs will all need to comply with ESG over time. This platform is also suitable for ESG advisors and other consultants. And then also there is a private version for enterprise customers. I have significant experience since 1990. I've founded several businesses and exited several businesses as well, particularly in the sustainability space and the ESG space. I'm partnered with Tully Smith. He has fantastic experience from Telstra and Business Chambers of Commerce, which is one of our key channels to market. We're backed by a very experienced team of individuals. Why now? We are first to market in adopting an AI and ESG platform. We deeply understand the sector. We're providing something that is hyper-tailored. It's a flexible subscription platform model, extremely accessible, but it's also backed by expert advice and consultants where clients might need those. And it's affordable, moving from a freemium to a premium version. We already have 13,000 businesses on our wait list, which is fantastic. And our plan to scale is moving from 50 users to 1,000 users by the middle of this year to 100,000 users by the end of December. And we're certainly on track to achieve that. Our pre-seed round is now open. So I do encourage you to jump onto the Wholesale Investor website. We've got a data room set up in there and you can request access. Please feel free to connect with me on LinkedIn if you've got any questions. And we really look forward to having you join us on this journey. We do have a webinar coming up on the 14th of May. That'll be a fantastic opportunity for you to engage with me personally, ask any questions, have a look at a bit of a demo and a little bit of a deeper dive with a little bit more time up our sleeve. So thanks very much for your attention. Search ChatESG, connect with us, and hopefully we can either have you as a customer or an investor.
Well, hi everybody, I'm Melissa Fisher, and yes, I am the founder and director of Acuitydg Development Group. Now today, I want to speak to you about a project that we are undertaking in the Yarra Valley. Now, it is an amazing project, but before I get to that, I would like to talk a little bit more about the amazing team that I have and a little bit about Acuitydg Development Group as a whole. So Acuitydg Development Group has been around for around about a decade, but it is formed by decades of wisdom and knowledge. Myself, I've been in the industry or the business for 30 odd years, and my team adds up to hundreds of years of wisdom and a lot of depth of knowledge and information. So we are leading in innovative concepts and solutions. We are known for the developments that we undertake and the solutions that we actually bring into the industry and all of our projects. Vision, collaboration and relationships, it's what we're built on. And we undertake great relationships with all of our partners, consultants, our internal team, as well as local government, state government, and certainly our capital investors. We're leading property innovation, absolutely, creating world-class projects. For us, it's really important to break down the boundaries of culture and certainly various different countries. So what we do, we take to a global market and certainly a global arena in outcomes that we create and what we collaborate with and bring together. We do significantly increase the value of our assets. So while we're looking at projects, we're looking at not buying what is already an end-of-the-line product. We're buying things that may have challenge, that may have creeks to move in various different aspects, but we come with solutions. So we're looking to create better outcomes, better use of land, better use of existing product, and in return we get to offer great returns, outcomes and win-wins for everyone concerned. This includes our tenants, our investors, but certainly local communities as well. So end of the line is not what we are starting with, but it certainly is what we deliver, and we deliver great end of the line products to everyone that we actually undertake business with. Passion for what we do. Every single one of us internally and externally have a massive passion for what we do. I have a great team around me and I'm very blessed for that, but they all come with varied passion. Passion for the industry, definitely. So each and every one of them have a large passion for the property industry, but independent passions are what make us a great collective team. Yes, we utilise all of our independent passions and talents to come together to form an amazing team and be able to deliver at every single level that we need to. As we're outsourcing, and we do, I have a small internal team. I have a very integral and talented internal team, but we have a very, very large external team of consultants. Every single one of them hand-selected for what they truly believe in, what is true to them, and then what they bring to the table for every one of our developments. And I could not be more grateful for each and every one of them, to be perfectly honest. It is collaboration at its very best. It also gives us the opportunity to bring together the expanse of wisdom and experience that we actually can. Our team has expanded globally, which is very exciting for the products that we actually get to deliver. Relationships are at the heart of who we are. My internal team, we are a very close team, but our external team is no different. So for everyone we partner with, we're forming relationships. It's not a transaction. We're looking for long-term relationships, and we have had many for lasting years, and that is what we're here to talk about today and actually offer to you. So a little bit about our team. So Nadeem, he is here with us today. He is our CFO, absolutely amazing. That is what he does, but he does a whole lot more than that internally for us. In our development, we have Rob, who is not here today. He is off working on site as our internal development manager. He is internal, so he's in-house to us. He's certainly not the only one that we actually undertake. We have Alison that heads up operations, Lincoln drafting in-house, and of course we have an EA who runs around like a mad woman making sure things are actually organised and done, which is incredible. But like I said, it doesn't stop there. We engage externally with a lot of consultants, and again, I'm very, very blessed to be able to demonstrate the names of some of the people that we have the luxury of actually working with and what they bring to the table. So it is a very large collaboration of everyone we bring together, and everyone does deliver a lot to every single project. Like I said, we're not transactional at all. We're very relationship based. Now let me talk to you about the project. This is a project, I said this is my baby, this one. This is our latest project. We have quite a few projects underway at the moment, but this is the latest one that's come to the table. So it is in the Yarra Valley in Victoria. So it is Coldstream, the gateway into the Yarra Ranges. So a gateway project, we're working very closely with state government and local council on this one. It is tourism led, but the industries or the aspects we're tapping into are a little bit different. The Yarra Ranges itself, wine region, for all of you that don't know, it is cold climate wine region, and it is well known right across the world for it. It has a lot of great culture, but entertainment, what we've just heard about, entertainment's incredible. So Dame Millie Melba actually has her name on this parcel of land. So there are many aspects that we are dragging out of history and bringing into the forefront of this project. So it is, while we talk about tourism and well-being, it goes beyond the standard of what we actually know. Tourism and hospitality meets tech and innovation. This is exciting for us. A very deep passion of mine is to see things into the future and ensure that we do things in a better way than what we previously have. There's a lot going on in the tech space, and there's a lot of new innovation that is coming to the forefront. Tourism has had its challenges for quite some time based on the traditional way of doing things. So for us to be able to bring the two together and create great outcomes is very exciting. It also puts us in the forefront of a lot of incredible people. The project itself, yes, it is a gateway project, and it will actually break down the barriers of traditional hospitality, creating a world-class destination. Airport, yes, bought this with a large parcel of land and an airport that comes with it. So now we're bringing multiple industries together, which again gives us diversity in the project, but gives us great opportunity in what we are able to deliver. 374-acre development. This blends cutting-edge design, culture, heritage and environmental stewardship. Master plan led, yes it is, but the forefront of this is wellbeing, education and experience. So wellbeing is a very, very large part of what this project is all about, but that does not start with day spas. Wellbeing for us actually starts underground and it works its way up, weaved through every single aspect. So we give consideration to the air that is breathed right through to every environmental aspect, how water is treated, and then definitely the experiences are created. So when people leave, they leave feeling a whole lot more alive and a whole lot more better than what they did when they arrived. We also like to leave a footprint into the future with everything that we do. So we are looking at a lot of research into the future of wellbeing. What that actually looks like means there will be a research and development aspect to the project. So again, whilst we look at what is current today, which is amazing, this project will get delivered in 5 years from now. So what is current today is certainly not going to be current in 5 years, let alone 10 years. So there's a lot that's said for being able to see into the future and understanding what people are actually looking for and where that ends up in years to come. Education is essential. People only know what they know. So bringing awareness to things is paramount in all of our projects, and that starts with our team, but it actually leads through to all of our guest experiences as well. We get to bring the opportunities of ancient wisdom blended with the future of what well-being and wellness actually will look like. Agriculture is a massive, massive industry, especially in this country with where we look at the tech side of it, where it's headed. It's exciting to work with that industry on this project, maintaining what we call the absolute true paddock to plate experience. So it is grown literally on site. And will be delivered to your plate. But there's a very big educational side that is being delivered in the agricultural space. Luxury accommodation, just imagine a 7-star luxury accommodation retreat at the doorstep of an amazing wine region. So we have 4 stages of accommodation. We want to make sure we can cater for families, as well as being able to create the privacy of luxury accommodation. World-class wellness, this is just a snippet of some of the things that will be included in the project, and then the innovation of dining and entertainment. So state-of-the-art venues, bringing immersion and virtual reality into it, tying together nicely with history and then leading into the future of all of the industries that we will be working with and making some interesting changes in. Experience. We want to create a place that absolutely leaves people having new experiences. The experience of today will be different to the one that they have tomorrow. So encouraging them to come back and immerse into the space more than once, to tell their friends, but more so, every time that they leave feeling better and more alive than they did when they turned up. Aviation, like I mentioned, we bought this with a small aerodrome. It is being extended. So the runway itself and the airport will be extended to enable private charter to come in. The industry, aviation, is moving in a very quick way for what it is, but it's moving into some very interesting spaces as well. So we will lead the way in aspects of that. We have some incredible people in that space that are working with us and that are going to partner in the airport side of it. The training aspect of aviation will certainly help fill the gap with the shortage of international pilots with a major training school that is there. Education and regenerative experiences. Everything from curated walking trails, immersive virtual reality installations, hands-on experience, you name it, it will absolutely and utterly be brought into this space. Education is a very big part of who we are, what we do, internally, externally, but ensuring that we can deliver that to our guests and bringing generations together is a very exciting space to be in. So a couple of things that we look at, economics is one of them. Like I said, we work quite closely with the state government and local councils. We give a lot back into our communities in various different ways. And for every development that we do, it's really important to give consideration to the local communities and be able to make the benefits that we possibly can from an infrastructure perspective, but also being able to ensure that the communities can come in, utilise the product and enjoy the experiences that we create. We are addressing demand for international pilots, catalysts for regional economic growth, absolutely, and develop hospitality and wellness resource with innovation training facilities. Unwavering commitment to excellence, it's where we start. And we say anything below excellence is not acceptable. And we have formed this internally as a business and we expand it across all of our developments. This one will be no different. So excellence is our baseline. It excites all of us to be able to exceed that. And I think we deliver that in every step that we actually take. Future vision. Like I've said, this project will be delivered in about 5 years. Right, so we need to be in future vision. We need to be giving great consideration to what that actually looks like. Otherwise, you actually miss the point. And we are well in front of the 8 ball, certainly not behind it. And economic and industry impact. Impact is something that I think we all consider part and parcel of what we'd like to do every day. So again, it's something that we overlay into all of our projects. So an opportunity. Absolutely to partner with Acuitydg Development Group on this, investing into the next stage of our project development. This stage has a 2-year horizon. So this will take us through to planning scheme amendments and full development permit, which gives us an exceptional uplift in the asset that we're actually sitting on at the moment. The investment opportunity to participate in notes to be issued to our special purpose companies for the project. And each note will have a coupon of 15% per annum delivered. Now, investors can exit at the end of 2 years. You don't have to stay in, but anyone wanting to stay in will actually be given first option before anyone else is able to invest in the next stage of this development. There are opportunities for equity participation. We will be here for the rest of today and all day tomorrow. We are at booth, I think, 15 next door. Come and see us. We're happy to chat about all opportunities. But capital's not the only thing we're looking for. So we're also looking for strategic partners that actually, while I say this, let me let you read the disclaimer. Strategic partners in tech space and other innovations. Like I said, we're very much in collaboration. So if tech is your thing and wellness, tourism, hospitality is something that excites you, we'll certainly be next door and I look forward to talking to you. Thanks very much.
Hi, morning everyone. Okay, so very pretty image. Thank you for all enjoying this.
Do you believe in the right moment? What if I told you there is a place in that moment? A place where what if becomes what is. Where tradition and innovation seamlessly work together. Where technology can create entire markets. Southeast Asia is in the advent of a breakthrough. A new wave that is set to change the world as we know it. But how exactly do we amplify this wave? Well, it starts by looking inwards and finding visionaries, innovators who dare to make a difference. And who are these market creators? And what do they hope to see for the future?
Tôi thấy một tương lai nơi mọi lao động phổ thông đều được tiếp cận với những giải pháp tài chính số nhân văn. Di mana semua individu, dimanapun lokasinya, mendapatkan akses yang sama pada barang dan kebutuhan pokok dengan harga yang terjangkau. A world for homes that are smart, connected, and green.
Masyarakat di mana setiap orang memiliki akses ke pendidikan yang lebih baik.
Saya melihat satu masa depan di mana petani dan seluruh komunitasnya bisa mendapatkan segala apa adanya dalam hanya satu klik.
Where we can keep our streets clean and our air fresh.
Pasar di mana ada transparansi di berbagai bisnis.
See a world where age does not limit one's potential.
So what do all these uncommon companies with uncommon goals have in common? The shared mission to uplift the lives of the next billion.
Thanks, everyone. Good morning. And welcome, and thank you for joining me at the Emergence 2025 conference. My name is Charles Wong. Before I start, can I get a quick show of hands? How many of you in the audience in the last 5-10 years have been to Southeast Asia? Can you please raise your hands? Wonderful. Okay, I feel very enthused at the moment. So, by background, my name is Charles. I am the co-founder of TNB Aura, joined by my partner, Vic, who is in the audience today. For those of you who are wondering, TNB, as the initials, stands for the next billion. It often gets asked, is that next $1 billion, guys, isn't that a bit on your nose? No, that's the next billion users. And where will that come about from? It's from the emerging markets, of which 600 million of those are sitting in Southeast Asia today. In short, and I'll keep this part fairly brief, I'm happy to have a chat with many of you after this today. We are a thesis-driven Series A venture capital investor, investing all across Southeast Asia, particularly Indonesia, Vietnam, the Philippines, and of course markets like Singapore, where our headquarters are based. We're privileged today to be now investing out of our third fund, backed by many global, highly renowned investors around the world. I'll share some more of that a bit later. And it's my pleasure today to share with you guys a little bit of that journey. In terms of the team, we are a team of, let me just switch to a different mic because I like to walk around a bit. We're a team of 20, based across and on the ground in every single one of the markets that we operate. The team are comprised of experienced investment professionals who work together for the greater part of a decade. Every single one of us has grown, built, and exited businesses in our regions in the past. In addition to being top-down, highly networked across the region, we are also very much building capabilities that help our portfolio companies. So you'll see across the team, from Glenn, who runs exits for us, Joe, who runs our investments and research team, to David, who runs value creation, each of these capabilities forms a fundamental part of how we think about the world. In building up our organization, we build for the future. We're now onto our third fund, as I mentioned, backed by global DFIs, sovereign funds, fund of funds. And I think for many of you, if the objective today of myself is just one-fold, is to get more of you to look at Southeast Asia as an opportunity for investment in the coming decade. So, why Southeast Asia? I enjoy this a lot because I think for many of you in the crowd, it seems you've been there, visited there, hopefully looked at investing there in the past. So a little bit about myself and my journey. So I started my career here in Sydney, Australia, as a management consultant, working with Booz Allen and Hamilton back when it was called that. From that, I helped develop Booz's first private equity business called Pallas Capital, following which I went to Harvard in the US, where I had classmates and colleagues who came back to Southeast Asia to form the biggest billion-dollar companies that many of you would have used in your trips there, such as Grab and Gojek. My first fulcrum moment of where to invest as a venture capitalist came following my MBA, where I decided to go to the Wild West of China. This is back in 2012. And I felt at that point the inevitable, the undeniable need to be one of the biggest markets that was encroaching and developing and changing the shape of the world. It was true. So that was China back then. I worked there for about 5 years. I even ran one of the larger tech businesses there called Groupon. And then following that, met my co-founder, Vic. Following that, I decided the next fulcrum moment was Southeast Asia. So I will not, and you'll, for those of you who know me in the crowd, I don't like to read from slides. So let me give you the highlights. Southeast Asia is a population, this is now slightly out of date, of over 660 million people. The ages are inverted. Rather, so instead of Australia, where you'll have over 50 to 60% above the age of 35 in an aging population, it's the opposite here in Southeast Asia. Number two, we're one of the most digitally connected markets in the world. And three, mass adoption of technology is just native. So what makes for Southeast Asia, in addition to these great stats, different, and why is it different now than it was in the past? And I think that's useful just to go past the surface. Three primary things. The first is 660 million people, 140 million of which will be added to the consumer population within this decade. That's 140 million people, all of which, to Steve's point earlier, are completely mobile first and AI native. I have a 10-year-old and an 8-year-old kid. They no longer use Google. None of their friends, none of their cousins, my relatives in all the various markets that I live, none of them are using this anymore. It's completely different. The usage of technology is already shaping, and much like China with credit cards, if you ever go to China, you won't find one. We will leapfrog that in our side of the world. Number two, the market of Southeast Asia used to be one of many that was bundled together within the Asia bucket of allocators. The eyes of the world are, and increasingly will be, on Southeast Asia. Just looking at allocation itself, Southeast Asia consistently grows at about 10 to 12% CAGR in terms of the AUM pool growing. And unlike other developed markets, but much like other developing markets, the largest proportion, the majority of this is in venture capital. And why is that? It's because it's not the legacy businesses that will build the future of Southeast Asia, but the new ones that are there. And the third, and perhaps the most interesting point to me about why Southeast Asia is so relevant today, and the consumers are so relevant today, is because it's one of the most amazing places where you can do good and make great capital returns at the same time. Just to be very clear, we're not an impact fund, no big I in our name or anything like that, but we find that every investment that we make affects lives of those next billion. This is just a quick snapshot of the maturity of the ecosystem. Already to date, we have over 39 unicorns printed in the last 10 years, of which several have already gone to IPO. There are 19 companies, including some of our own portfolio companies, that have announced that they will IPO in one of the local exchanges, or even Australia, or in the US, in the next 3 years, waiting for the gates of the IPO market to open, as I'm sure many of you guys are here as well. And the examples on the right-hand side just give you some flavor of the scale of the businesses that we can build in a market that has 600-odd million people. So let me spend a couple minutes now on how we invest. And I'll try and, to many of you who have invested in venture capital in the past, draw a stark comparison with how venture is historically done. I think that's quite important because as I started this whole spiel so far, we are a thematic-backed, thematic-driven Series A investor. The way in which we invest, I can characterize into 2 dimensions, and maybe to make it simple. Most VCs out there take out an approach which is highly spray and pray, very, very diversified portfolio, 50 to 100 portfolio companies per fund. We think that's the wrong way to approach it. We think conviction is key in a market where you have a few but huge outlying performers. In that market, you want to be highly convicted to an investment, make a smaller number of these, but have a higher proportion of investment, ownership stake in each. So when they exit, you return the fund spades and spades over. So on that dimension, we are a high conviction fund. On the second dimension, most other VCs are extremely inbound. Not to say that that's bad at a seed level or an angel level, but as a Series A investor, being inbound is fraught with bias. Today you meet a marketing technology company, a financial services company, a logistics company, one in Indonesia, one in Vietnam. How can you be an expert in all of these at exactly the same time the moment the company comes to you? So we find, and we have only ever prosecuted deals this way, it's important to go outbound, to look at a theme, evaluate that, and to identify the companies that we want to invest into. As usual, we take a 4-step process. There's a procedure to this. It starts with something which we as TNB Aura have developed with the top universities, originally in Singapore, but now across all of Southeast Asia. In addition to obviously being guest lecturers, we help support and develop the curriculum of the universities in Southeast Asia for entrepreneurship. We think that's really important to not use Amazon, Spotify, things like that, even Singapore Airlines of old. It needs to be based today on new examples. And so in order to do that, we developed what is now the most robust, extensive data set of unicorn and near unicorn businesses in all of China, India, and Southeast Asia, probably in the world. That data set is a time series over the last 15 years, and we use that to look at what has happened first in other markets so that we can identify what should happen next in Southeast Asia. The way in which we use that data is then with a combination of demographics, socioeconomics rather, and infrastructure level meters to evaluate, all right, if it's this large in China, this large in India, roughly how large should it be in Indonesia as a theme? The goal is not to copy and paste. Just want to make that exceptionally clear. As made point by this third here, where we develop deep dive research. We have a dedicated research team based out of the Philippines with a team also in Singapore, working together on over 40 different industries and sectors. I'm almost 100% sure if any of you are looking at a particular industry and sector, you can come chat to us. We'll very happily share with you our research, our sprint in a particular area. The goal of this research is to take those thematics that we see in other parts of the world and determine what is the nuance, what is the relevance to Indonesia, Vietnam, Philippines, as I mentioned. The final step in our whole process here is to understand where to invest, of course. but we don't do it by waiting for a company to come to us. As I'll give you an example over Leaf. We always go outbound, and the goal is for us to canvas the market. When we find a theme we like, we understand a sector that we want to invest into, and a particular business model that we think is relevant, we only back the best. It's why we're well known, and for many of our investors, their only allocation to covering Southeast Asia. I'll give you one example, and I'll do this briefly. It's far too small to see the specifics on the page. But the goal of each of our research tasks is to understand the scale and size of a market, rapidly from an industry level, go down to the sectors. As an example here, where we invested into the largest private EV charging business, not just in Singapore, not just in 1 or 2 markets, but in all of Southeast Asia, is to then go and say, what are the sectors that can make money? A lot of discussion on Tesla earlier this morning, 4-wheeler EVs. There are 6 areas and sectors to invest within EV. One of those is 4-wheelers. It won't be in Southeast Asia. Those markets, far too large. Even at VinFast, the first opening round, hundreds and hundreds of $1 million. It won't be for us. 2-wheelers, very interesting. We've invested into one of the largest in Southeast Asia. And one of the most interesting ones is EV charging. To give you a quick anecdote here, across all of Southeast Asia by 2035, almost every single country has made a commitment to ban the sales of new ICE vehicles, internal combustion engine vehicles. In Singapore, it's by the end of this decade. Combined with the fact that there are typically restrictions for how long you can drive a car on the road, by 2040, you've got a good chance that almost every car, if not every other car, will be an EV vehicle on the road in Southeast Asia. So this is a big theme. Now the question is, right here, what is the right business model to adopt in doing this? Again, the data is out there. We look at all the precedent models in more developed markets. It's one of the privileges of being in Southeast Asia, where we don't need to crystal ball in isolation. We have the rest of the world to look at. And you can see that there are several business models that are applied around the world. Disproportionately, the best ones are in this model that we call the end-to-end model, where you build your own infrastructure, AC, DC chargers, you take a yield off that. If the utilization rates are above 12 to 15%, you're breaking even and making amazing IRR on your equity. We then size the market. And the most important part here, of course, is to see who else is out there. Again, being outbound, we met almost 20 players, almost every single private player out there, before we understood that there was one who was never answering our calls, who had never met another investor, who was profitable, access to debt, didn't need any capital. That was a Business Charge Plus. We showed enough value with this research, with our compelling team, value creation activities, such that they chose only us to be the investor in their Series A. They'll raise another round at the end of this year. If any of you like this kind of space, come and chat to us. We're happy to introduce you to the founders. All right. Very briefly, how much time do I have, by the way? 1 minute. I'll be very quick. This data allows us to do so many more things than just figure out, here's a theme, here's a company. It allows us to also predict when shifts occur. Right, left-hand side here is on the big industries out of China. So this is based on the data set I said earlier. E-commerce comes first. Fintech next to pay for those goods. Logistics to move those goods around. Most of you may have a heuristic, a gut feel that this is where it is. You probably haven't seen this data before. On the right, we can break that out and understand within each individual sector, what are the themes that work. In short, this insight, which was that e-commerce in tier 1 cities in China, the moment 2017 hit, and you had a certain amount of adoption of e-commerce in the major cities, it moved. It shifted to being social e-commerce in tier 2 and tier 3 cities. By knowing that, we identified first, this thematic, we canvassed the market, we identified one player in Indonesia. Today, by a factor of 10, roughly about $500 million valuation today. We entered at a $40 million valuation about 3.5 years ago. Subsequently, 1 year from that, it became a $300 million valuation round led by New Enterprise Associates from the US. At that point, when we identified it, the founder himself didn't realize what he was sitting on. He didn't realize that he had the best unit economics in the market. All right, let me jump ahead. So in terms of the team and our approach, that's a little bit about us. In terms of the style in which we invest, let me just share, we've now made 23 what we call core investments in the region, covering e-commerce, logistics, healthcare, education, and the like. Because of our 40 sprints, we know exactly where we're going next. And as you can see for some of the purple tags here, if you like, the holy grail of ventures to find companies that are positioned in one company returns the entire fund. We've done this a few times, generated exits of some of these. Happy to chat about that as well. And maybe to end off, left-hand side, a little bit of benchmarking. We are audited by KPMG, so we always provide this to groups like Preqin, Cambridge, to make sure that we're always keeping track of our peer set. Thankfully, we're always happy to be in the top quartile, and for our most recent Fund 2, and as I mentioned, we're on to our third flagship fund now, and Fund 2, it looks like we're one of the top 3 funds in Asia, including China and India. We work closely with the government, and maybe I'll end on this. Hopefully today, if there's nothing else that it's that I've piqued your interest in looking at Southeast Asia as a market, that I've piqued your interest in a way that venture is done, can be done maybe, the way that we do it, that's very different from the way that the market does so. Our investors include the Norwegian sovereign DFI, Khazanah, which is our sovereign fund of Malaysia, FMO, the Dutch Development Bank of Japan, and many, many others, including Fund of Funds. I myself, again, as I said at the beginning, came from here, Australia. I love this market. I want to see it doing more with Southeast Asia. I always am struck with how many of the largest institutions have a very insular view of the world. But as I'm told by Steve, I think the audience today, hopefully, and from the show of hands earlier, I can tell there's a level of engagement. So my name is Charles, as I mentioned. My partner is Vignesh. Our email address is super easy, tnbaura.com. Take that now, take a photo, contact us, grab us after this. We would love to have a chat. So thank you very much, everyone.
So firstly, thanks so much for attending today, and a big shout out to Steve for putting such a massive event together. Steve mentioned as part of the introductions that we operate as an advice business within this space, and these innovative businesses that are all coming to market and developing are our core audience. We're seeking to deliver services to those businesses and also try to deliver to them access to capital. So what I'm going to talk about today is really that intersection of advice, capital, and asset management. So as a business in this space that was founded 26 years ago, we're very much focused on working with founders and founder-led businesses that have great ideas that need access to advice and capital. Our business was co-founded between my father and myself, as I said, 26 years ago, with a very simple philosophy. It was all about providing a combined advice experience for our clients. So our clients today are very much emerging businesses, founders, high net worth investors, and also family offices. We very much believe, very optimistic in uncapped opportunities, and we see this every day with the clients that we're working with as businesses, but also how our investors think about the future as well. So today we're a business with $1.3 billion of funds under management. Our business started as a wealth management business 26 years ago. We've got over 200 team members that are based here in Australia, but also overseas as well. And there are 4 key service lines that we focus on delivering for our customers: accounting, business advisory, wealth management. We're in the SMSF space as well, and importantly, corporate finance, which is a real key to what we do. This is how we think about our business, and particularly over the last 5 to 7 years, we've been on a very strong growth trajectory. We want to double our business every 2 to 3 years. Back in FY22, when we had 26 million of revenue, we set ourselves a goal to double that to 50 million by FY25, and we will hit that this year. We're then seeking to double our business again by FY28 to FY30 to $100 million, and we believe we've got the capability to do that and the pipeline of acquisition opportunities, but also organic growth. I think the key as to why we really understand our clients well is because we are a founder-led business. We understand all the grind and the grit that is required to actually build a business from nothing. So when we come to the advice piece, we come from a place of lived experience. And that's something that we're very proud of. And it's not just about our business being founder-led, but the fact that we've got over 20 founders that work in our business seeking to deliver advice to our clients and find the next best opportunity to invest in. The other key part about how we think about tying everyone to the future is this concept of employee ownership, team ownership in the business. So of the 189 team members that we have, half of them now have equity in the business. 48% of our business is owned by our team. We absolutely want to align with our team and make sure that they are participating in the value of the business that they're trying to help co-create for the future. So based on all of this, I think pretty dynamically about what we can do for our clients and the next best investment opportunity for high net worth investors. So to give you a bit of perspective as to who our clients have been over the last 26 years, I think this slide represents it pretty well. There's over 5,000 clients that we've advised for wealth management and SMSF. There's over 2,000 businesses that we've been engaged with, and obviously a lot of them still today. There's 1,000 of our clients who have helped access R&D grants. It was interesting to hear that spoken about just before. This is a fascinating part of what we do. But the fact that you can actually access this through R&D tax incentives and help fund the capital that you require for new development and products, that's a key part of what we've been able to do for our clients over the journey. There's over 100 SMEs that we've invested in, either providing equity or credit through our alternative asset funds management division, and 500 clients that we're actively working with on growth, transition and succession. And some of those sort of themes that Steve was talking to at the start, we couldn't agree more in terms of those three key areas, and I'll talk a little bit about that in a moment. And finally, this for us isn't just about the services that we deliver directly to our clients and the opportunities that we find, but we work with over 250 other professional services firms to help them deliver their version of what they see as a connected advice experience. So we think we play a pretty important role in terms of empowering aspiration and driving growth within this sector. I'm not going to go through all this slide, there's a bit of information here, but quite simply, as a business, we think about it in two key areas, the business segment and the wealth segment. Our business segment makes up about 50% of our revenue and about 50% of our team, and the wealth segment makes up a similar amount. Importantly, in terms of how we're structured, we have 34 team members now, I have to keep checking because it tends to grow every now and then, that are working as part of our Centre of Excellence around driving business growth. That could be M&A, operations, IT, finance, HR. So as we've become more acquisitive of late, and we've acquired 3 different businesses in the last 2 years, it's been important to make sure that you integrate deeply and are then able to make sure that you offer the services that they have to that larger collective audience. And I think this is the best way to look at our business. We are absolutely trying to combine what we do for businesses and also in that wealth management investment space. Clients will come into our business for one of those things that are highlighted around the outside, and then what we seek to do through our One Connected model is to make sure that they get access to everything we can do so we are fully empowering their aspirations and what they're seeking to achieve. We think this is quite unique. There's probably not that many companies of the size that we are that could do this much for their customers. So I'll just quickly touch on our results that we released last week. And the team have done a fantastic effort again. And you'll see some of the continuum in terms of our growth. But revenue is up 25% to almost $23 million. Our reported EBITDA was up over 100%, underlying EBITDA up 8%. Our margin was slightly down at 18% versus typically 21% in the first half. We pay a dividend. We pay out about 60% of what we earn, and that was up 3%. And our reported EPS was also up as well. Some of the key highlights has been around what we've been doing from an acquisition point of view recently. So we've always had sort of 8 to 10% plus organic growth, but we're now turbocharging this by virtue of some of the acquisitions that are very complementary to what we're seeking to do for our clients and the investment opportunities that we want to provide. So around about 12 months ago, we acquired a business called Pallas Capital, who are actually featured outside, and they're an alternative asset fund manager. They've been in the private credit space, they've also been in private equity, and in the past also property as well. But this business that we acquired, because it connected in so well with what we were seeking to do, it actually achieved its 3-year target earn-out in the first 12 months. So it's an absolute testament to that team that came into the broader Prime Group, but also how we were set up to absorb that opportunity and make the most of it. This philosophy around one connected services for our clients will continue on. We think it is genuinely different, and we are expecting to continue to have a strong second half for a full year result that we expect will be up 15 to 20% on the previous year at both a revenue and earnings level, and to see our dividends up 3 to 5% for the full year. Just on this side here, you can see the growth in the two segments. In the past, we would have been wrapped to have 10, 12, 14% growth in just one division, but the fact that we were able to have such a significant level of growth within our wealth segment was an impressive result by the team. This just gives you a little bit of a feel for how this plays out in terms of our business over the last 5 years. I won't dive into a huge amount of detail other than to say the benefit of our business is that we actually do have around about 70% of our revenue is recurring. That will continue to build to 75 and 80% over time. But what you're seeing there is that pretty much every division that we've got, whether it's wealth, SMSF, accounting and business advisory, or in fact capital, has been growing over the last 5 years. And I'll touch on this in a little bit more detail in a second, but we are in the right markets. And I believe the comprehensive nature of what we do for our clients means they keep coming back for more and more things. So the organic growth piece is sometimes easier to achieve because you are cross-delivering more services to your customer. This is our dividend slide. As I've highlighted, that's part of what we do in terms of the 60% payout ratio, and that has been increasing. So in terms of the strategy and the outlook for our firm, and I'll dive into some of the investment ideas that we're focused on, we keep it pretty simple. Prime place to be. We want the best talent in the marketplace. We want them to own equity in the business that they're helping to develop. And we're actively targeting to bring them into our ecosystem. So have a fantastic firm that people want to come to where they can develop. We want to compel the client to do more things with us. We don't want to give the client a reason to go outside our four walls. That's part of our competitive advantage. We want to keep on simplifying what we do. As we get bigger, we've got to make sure that we still focus on what are the core needs of our clients and make sure we do more of that. And obviously the final point is wanting to grow our revenue streams and our earnings. So just to jump into a few of the themes that we think are really important and what's driving our business is around the needs of these audiences here. So this is a fantastic report that was produced by Praemium actually quite recently released. And although it doesn't feel like it every day, cost of living crisis, etc., Australians are getting more wealthy, particularly those that have between $1 and $70 million of investable funds. You'll see there that over the last 12 months, the number of people that fit that cohort have gone from 635,000 to 690,000 people. They now control 3.4 trillion of assets, up from 3 trillion previously. This is just the growth in the last 12 months. And we talked about, or Steve highlighted at the start, succession and this great wealth transfer is the biggest thing that we're going to see, I think, over the next 5 to 10 years. And people are not prepared for it. Whether they're people that have portfolios now that might be shares, bonds, etc., or hard property assets, but their business as well. People are not preparing for what they need to do with their business. So we think there's an immediate need to address that for our clients, but there's also an investment opportunity on the other side, because the next generation aren't as excited as parents might hope they might be to take on the business that mum and dad were running for X number of years. The other key thing that we look at here is we are still a well and truly under-advised market here in Australia. Just have a look at that middle part of that table on the right-hand side there, the unmet advice needs. They're material. And I think part of this is because people don't know where to go to get that advice. And quite often, advisory firms are very siloed in what they do. They just focus on one piece. So that's why we're trying to bring this together to give a more comprehensive solution. I won't touch on this in any more detail other than to say we're very aspirational. Aspire, innovate, grow and impact are our taglines, and we live that every single day. So the outlook for our firm, again, just confirming, we're seeking to grow our revenue and our earnings by 15 to 20% this year, see our dividends increase, and it's about continuing to do what we do well, deeply integrate, identify great acquisitions with great people that are highly aspirational. They're not looking for succession plans. They're looking to join a group that can do more for their clients and make a bigger impact. So that's fine, that's the prime story. That's where we fit in the ecosystem in terms of advice, capital and asset management. Now I'm quickly going to pick out just a few things that we're thinking about from an investment point of view and things that we're seeing. I've touched on this already, but this great wealth transfer and this under-advised area, there's a really significant opportunity in the advice space to help people think about this transfer of over $1.9 trillion of assets that need to be bequeathed to family beneficiaries. This business segment, you can't actually absorb the number of businesses that will come to market over the next 5 to 10 years. The volume will be more than what investors can actually cope with. And even the funds management industry isn't set up to deliver solutions to these size of businesses. So the problem here is, where's the advice coming from? Who's giving it? Who's shouting from the rooftops, come and see me, we can help you with this? And I guess that's part of what Prime's purpose is. So I guess the final opportunity there, really from an advice perspective, is to be proactive, to start conversations now, to make sure that families are talking about this and getting it on the radar so that we can plan for the future. In this alternatives bucket theme, which everyone will define probably slightly differently, there's three things that we're looking at that we think are, some are a little bit different, some not so different. But this SME investment across equity and credit, where we've invested in over 100 businesses over the last 5 to 7 years through our alternative asset management division, LTOR, we think this is a material opportunity. I'll touch on that in a little bit more detail, but the number of businesses that are currently making $1 to $4 million of EBITDA plus, great businesses with fantastic cash flow and recurring revenue. I know it's more glamorous to be in a startup and VC, I totally get that. But these are established businesses with great cash flow that are a fantastic opportunity for someone, even if it's not the next generation within the family. This next one, I'm pretty certain that maybe only one other person will cover today, but the business of investing in sports, media and entertainment. And I'll touch on a transaction we completed over the weekend. But this is an emerging area here in Australia. It's well defined and well invested in the US and Europe, and the returns that have been achieved in this space have outpaced quite a few, definitely private equity. And I'll talk a little bit more detail about what we're seeing there. And housing and property, I think we all know that theme, and Australians love investing in property, but I'll just quickly touch on one key area that we're looking at. So this business of sports, entertainment and media. On the weekend, our funds management division actually acquired an NBL team, the Tasmania Jack Jumpers, a very successful team that was established around about 5 years ago that actually won a championship within that first 5-year period of time. This is a business that is profitable, that has a fantastically committed fan base. And what we're seeing at the moment now is that owning sporting clubs and a whole host of things that are involved within this sports space is no longer just the domain of billionaires who have some spare change. We're seeing this as a real investment class where we can differentiate what we're doing and offer this to wholesale investors. And one of the key themes that we're seeing playing out at the moment is that valuations here in the Asia Pacific region are vastly lower than what you would see in Europe, the US and various other places. So it's presenting a genuine opportunity. You're seeing now that overseas investors are now pushing into Australia to take advantage of that. And I don't believe, and I'm happy to stand corrected, that there's any other investment banks or funds management or advisory firms that actually have a dedicated sports, entertainment and media arm to what they do. So we're quite differentiated. There's pretty much not a deal that is playing out in this space, particularly sports, that we haven't had a look at or been able to see. So we've got pretty exclusive deal flow here, and we see that as a great opportunity for our investors. Just finally at the bottom there, there's some of the areas that we've actually been advising or investing in the recent past. So obviously basketball, which you can see, cricket, both rugby codes, motorsport, which is a fascinating area in itself. And as I said, sports and entertainment tech. This isn't just about clubs. This is about the whole ecosystem and how you can play to different parts of this theme. So housing and property, I'm not going to dive into a huge amount of detail because I am conscious of time. But there's no doubt that Australians love investing in this area. I don't think there's ever been more diverse ways to actually invest in this space. The non-bank space is in its infancy. So on the credit side, there's plenty of opportunities. And essentially within this housing and property space, we've undertaken about 30 transactions in the last 2 years. So we appreciate it, we understand it, we know that our clients like investing in it. And there's one area that I guess if I could just touch on before I finish up, that we particularly like, it's around this NDI space. Whether it's the development of a specific facility for particular people with needs, or whether, and that's a development opportunity and a development profit that comes with that, or owning that asset and receiving an ongoing income stream, we're equally favourable towards both of those areas. And we've originated quite a few transactions in this space. So to close today, from my point of view, we are absolutely operating at the intersection of everything that's happening from an advice, capital and funds management point of view, particularly around alternative assets. We want to deliver that comprehensive service for business owners and provide that next unique investment opportunity for investors, wholesale investors. We see this as a growing opportunity for us as a firm, and that's why we've been building and delivering some pretty decent results for our clients, but also for our own shareholders. And the market that we play in is just going to get bigger. There are some significant needs that need to be addressed, and we believe we're best positioned to do that in a very comprehensive and connected way. That's pretty much me done. I again really want to thank Steve and the Wholesale Investor Network for having us participate in today. We couldn't be a bigger believer in what is being done here, and we're really glad to participate in it. Thank you for your attendance.
Hello, everyone. Who here drinks coffee every day? Can I get some hands? Oh, look at you all. Is it 1 cup a day? 1 cup? Oh my God, barely anyone. I love it. 2 cups? Hello. This is getting into confessional territory now, but 3 cups. Can I get some hands? Okay, my people are here. So with responses like that, it is not a surprise that 70% of Australians drink at least 1 to 2 cups every day, and that is fueling a $3 billion market in Australia alone and $470 billion globally. So another quick question. Who knows where the coffee they drank this morning came from, or maybe the person who grew it? Oh, literally no one. Oh, just one guy, thanks. Who knows if the person who grew that coffee had a sustainable livelihood? Yeah, nobody. Because the thing is that as consumers, we just don't know. Got to figure out my clicker here. So in the global supply chain, consumers really do lack the traceability to know if the coffee that they are buying is ethical. And then on the other side of the supply chain, the farmers who actually grow this amazing product, they lack the stability and the pricing that they need to thrive. They lack what they need to have sustainable businesses. But at Old Quarter Coffee, so we source 100% of our beans directly from smallholder farmers across 7 unique Asian origins. And amazingly, this gives us an exclusive product range that's available nowhere else in Australia. We go direct, we cut out the middleman, and we build these long-term relationships with farmers. So with our vertically integrated supply chain, the great thing about it is, welcome friends, come on in. The great thing about this vertically integrated supply chain is that everybody wins. So it's like win, win, win. Consumers, they get traceability. So they get that to know where the coffee comes from. They get to feel connected and a part of something bigger. They get to know that that daily ritual that they do 3 times a day is actually doing good in the world. And they get to taste rare coffee. So consumers, they're winning. And our farmers, our farming partners, they get stable pricing, they get fair pricing, and they get an opportunity, to change their lives. And then Old Quarter. we get an amazing competitive advantage. So we get the stable pricing, we get the brilliant quality, we get an exclusive product range, and excitingly, we get this like brilliant brand story to share with our consumers. So I'm Amelia. I am the CEO and co-founder of Old Quarter Coffee. I actually hate being behind a lectern. It's very uncomfortable for me, but I'm making it work. My co-founder and my partner, Yos, and I, we spent like a decade in Asia. And we were living and working there, and yeah, it changed us as people. It changed the trajectory of our lives. And when we fell in love with coffee, we actually, firsthand went to the farms and we experienced like the challenges that farmers face. And we were driven to start a company that would solve that problem for farmers and, ultimately give back to the people and the places that had really given us so much. And so in 2017, Old Quarter Coffee was born. And since then, we have been scaling fast. So we've grown 10 times the industry average. We have grown from just one little baby pallet of 700 kilos to 45 tons in 2024. And we've generated $1.23 million of extra revenue for smallholder farmers and ethnic minority people across Southeast Asia, something that we are so, so proud to have done. Our wholesale business is also thriving, so don't get scared by 0%. That actually just means that we have never lost a wholesale customer to a competitor. And we've been growing 46% year-on-year average for the past 5 years in the wholesale business. Our venues, they are also doing amazing. So they're actually profitable within 5 months, which, if you know much about our industry, is very fast. Great, so our business model, our Australian expansion, so we import the coffee, we roast it ourselves in northern New South Wales, near Byron, but don't judge us. And then we sell that coffee to 40 wholesale customers across the east coast of Australia. We have 4 company-owned stores, and we've got a thriving online business as well. You will see that all of these channels are EBITDA positive. Very healthy percentages, just take note there. Cool, so what is the competitive advantage that sets Old Quarter apart? Really, if you boil it down, it's the trust and the loyalty that we've built at every step of the supply chain since we started. It's the trust with partners and the customers here in Australia. We have never lost a wholesale customer to a competitor. We have 5-star reviews across every venue and just loyal people who really believe in the purpose of the business. But that trust and that loyalty is also the reason why our competitors between 2023 and 2024 experienced up to 40% price increase. And Old Quarter experienced just 1, because they don't have the relationships that we have built over the past 7 years. So like while others in the industry are really flailing, I would say, with the chaos in the supply chain, they also have disruptions, quality issues. We just don't have that. We're insulated. Okay, so I've told you a little bit about who we are, and now I'll talk to you about the investment opportunity. We're in a safe note round. We're raising $1.5 million, but we've already raised about 1/3 of that, and we're going to use that money to continue to scale our Australian business. So we're going to go from 4 to 6 of our profitable venues, invest in Green Bean, this premium product, enough supply for us to keep scaling, and we're going to triple our production with a new roaster. We'll also invest in marketing, which is going to help with the brand awareness and the customer acquisition. This is a very unique opportunity to join us before our valuation increases, and so we're offering a 20% discount on the next priced round and a $7.5 million valuation cap. I will just say that this is very much a stepping stone to our Series A raise. This is about taking Australia to the next level, but we are gearing up for a much bigger global expansion. Cool, so what are we going to achieve? The thing is, we've been growing fast and we want to continue to do that. We're going to take what is really profitable channels and just take the Australian overall company to that profitability. I'm doing good on time, I promise. I'm going to be done in about 30 seconds. So just super quickly, I mentioned this is a bridging round. Series A is coming in 2025. We already have a joint venture partner already located in Laos. We have a land partner. We have a farm site selected of 200 hectares. And this is going to enable us to properly vertically integrate. It's going to allow us to take advantage of the global green bean demand that is not going away. So we're going to set up our export hub. We're going to be able to export to ourselves in Australia and waiting customers that we already have in the Middle East, in America, in Europe, and also in China. And that 47 tonne that I talked about before that we consume in Australia, one customer is 100 tonne waiting and ready, just one purchase from one person. Also, Laos will be the home of our first Old Quarter venue in Southeast Asia, but it will definitely not be the last. So we are experts at rolling out venues, and we're looking at testing that in Laos, and then we will take that to neighbouring markets, starting with Vietnam. So this is just very much the beginning of our journey. So why invest in Old Quarter Coffee? Very driven, committed founders at the helm of this company. We have a proven track record of growth over the past 8 years, and a product moat around us, you know, with 7 unique Asian origins, of which you do not see anywhere else in Australia. Loyal business relationships that insulate the entirety of our supply chain, and global expansion plans very much ready to execute. And ultimately, this is a very timely investment opportunity for you to join us before we scale even further. So thank you so much.
All right, thank you for hosting our company. My name is Daniel Huang, and I'm the CEO and founder for Bingo Tech. Today, I'm very excited to introduce you to Bingo, a revolutionary solutions that is electrifying and reimagining the commercial fleet solutions for the entire global market. So I would like to get started by showing you a few highlights for the company. We are the world's first company that has a one battery swap fits all 2, 3, 4-wheel electric vehicle solutions company. Last year, we booked revenue of $1.8 million, and we expected to hit 3 times of growth this year and 15 times growth by 2026. We have been deploying our product and service in 7 countries in the world and expand to more. And it's approved by one of the largest platform company in the world. Our ERP software managing vehicles and batteries and drivers and charging stations, swapping stations, and all aspects of business of fleet operating partners. And we're excited to launch our first AI agent for fleet management later this year. And we have also been approved and committed by customers to launch a 4-wheel electric 350 kilometer super long-range lightweight electric vehicle systems later this year. So that's a little bit of the company. So the last mile delivery market is massive. It's $160 billion a year business and expected to grow 10% per year in the next 10 years. But you know, many players are looking to actually electrify their fleet. However, they're struggling to a lot of challenge when it comes to converting and upgrading their ICE combustion engine motorcycles or electric cars to commercial fleets. It's unlike consumer electric vehicles that, you know, the revolution's everywhere. Commercial fleets are falling behind because there's so many challenges are facing this industry. Their last mile commercial fleets, they're very expensive to develop product and takes way too long for many of the operating partners. there's no complete systems. When they identify some products like motorcycles and EVs, and they still need to find batteries and charging stations and swapping stations, and they don't just work simply together. And of course, range anxiety. How do they manage? When do they charge and how and where to charge the vehicle? And finally, there's no intelligent software that can manage not only the physical assets, but also the people, the business, the insurance, and everything together as a package. Bingo's solutions is as comprehensive as it is innovative. So we offer a hardware plus ERP software system all together. Our solution doesn't require any operating partners to have upfront development costs or time. And no existing charging infrastructures are required. And we offer a versatile range of 2, 3, 4-wheel electric vehicles options, plus all the batteries and charging stations and charging sized equipments together, and all paired by a turnkey AI-powered business software platform that help the fleet operating partners to manage their business. That's our solutions. So rather than just talk about the products, I would like to play a video and show you how everything comes together. So one swap fits all. That's what we do. So our business model is designed for a truly global, sustainable, and scalable growth. We handpick and tune a lot of hardwares together: batteries, vehicles, charging stations, swapping stations, and we offer our products to customers in many countries, and makes about 20% margin for the hardware sales. And all complemented by a monthly subscription service to our software, where we charge per vehicle per month base for them to use our software to manage all assets, plus their business. And in addition, we also have add-on software services that we offer, like onboarding and future advertisement, transactional-based kind of a e-commerce store fees and things like that. So we call it a Shopify-style solution for electric fleet operators. That's our business model. And I would like to show you the kind of growth trends on how many devices we've been managing on our platform in the past couple of years, and also what we're projecting for the next couple of years. So this is the world map, and these are the countries that we already deploy our products and service to. And these are the areas that we're planning to deploy the product and service in the next couple of years. And these are the typical customers that we're dealing with, and then with the typical product, hardware product that you can see. And in 2003, 2 years ago, our platform managed about 2,000 connected devices, battery stations and vehicles. And by the end of last year, our system was managing about 6,000 devices. And we're on track, this year, end of 2025, to manage over 57,000 devices, and by next year we project going to manage 123,000 devices. And it's a huge market, for this entire electrification for the commercial fleets. We did about 1.8 million, and last year about 8 million this year, and projecting to grow to 28 and 60. In the next couple of years. And based on the many feedbacks from our customers, that we're just scratching the surface, and people are just loving our solutions. And so what's unique about Bingo is, first of all, we have the expertise that we have, managed, over 50 cities, millions of battery swaps in the past. And we have a software-defined vehicles and platforms that 3 years in the makings that, people, our customers just loving it. And we have many partners in, electric vehicle OEMs that we already sign up and tune our system with. And of course, we have a very experienced team and managing, not only the products, but also the sales and marketings. And on top of that, of course, we have a solid customer order pipeline and new product pipelines, including AI, new EVs, and blockchain-enabled fintech. Let's talk a little bit about the team. We have about 30, actually more than 30 people across the United States and China, and more than 60% of them are R&D. A little bit about myself. I in the early days of my career, I took a company public in Shenzhen, China. Today, the company is a $2 billion business. And after that, I founded a company in California called Mofi, one of the first portable power bank companies in the world, supplying to Apple and many telecom companies. I sold that company to NASDAQ, trading companies in 2014 and founded the current companies. And we have a team that just have a lot of experience in mobility space and then also the last mile delivery space that can really execute. And of course, we're raising capital. We already raised about $2 million last year, from institutional funds, and we're looking to raise another $2 to $3 million in the form of convertible note, and prepare and getting ready to raise our Series A round later this year. We already have a global kind of partnerships with one of the largest companies in the world, and we're expecting to really have a pretty great opportunity in front of us. So I hope that you like what we're doing, and I hope some of you will join me on this exciting journey. So thank you.
Hello again. Ryan McMillan, Merkle Capital. We run the MTC Digital Asset Fund. It's a high conviction, long only liquid crypto fund. It was actually the best performing fund in Australia last financial year. So I'll talk a little bit more about performance later, but I also want to talk to you about Bitcoin, about changes in US policy recently, about our fund's investment approach, and why a fund structure can make a lot of sense to investors. So let's dig in. Bitcoin, it sounds cliche, but Bitcoin is a new paradigm. That's why nobody intuitively understands what it is. I think a really good framework is to break it down and compare its qualities against some similar types of assets. So gold and the dollar here. For a long time we've had the US dollar and the gold. Gold has been a better store of value. The US dollar's lost 98% of its value against gold over the last 100 years. But gold is very hard to move. It's quite expensive to store. And it's not very divisible either. So there's a bunch of qualities here of these different assets. US dollar, on the other hand, very easy to move, very easy to store, highly divisible, but supply is unlimited, which is why it's lost so much of its value. It debases at around 8% per year, where gold is closer to about 2%. And there's a lot of work, obviously, in digging gold out of the ground. Then along comes something like Bitcoin. So the supply is fixed, which makes it actually more scarce than gold. So it's actually a bit better at gold in terms of scarcity. So that makes it a better store of value. And it's also faster and cheaper to move than the US dollar. So we think it's not unreasonable to think that a lot of money can be attracted to this asset class. We like to think about in two phases. So the first phase will be Bitcoin being used as a store of value, and as price increases, its volatility will start to reduce, and then it will be started to use as a global reserve currency as well. So that first stage, what does that look like? If 18 trillion of capital has already been attracted to the gold market, we don't think it's unreasonable to think a similar amount can't be attracted to a better store of value, which would take the Bitcoin price to $1 million or so, around that mark. Once that'll take a few years, a lot of estimates around 5 years, maybe around that time period. Once that happens, the volatility will start to come out. You'll have a serious asset then that's worth 18, 20 trillion, and then you'll start to see that sovereign adoption in terms of a global reserve currency, because not only does it have these qualities, it also doesn't have that counterparty risk. It's not somebody else's debt. It is. It has no sovereign risk, so and it's faster and cheaper to move, and it's open 24/7. So there's a lot of benefits and reasons why you would naturally move towards it. In the US, obviously, we've had a big election recently, and this was really big news for crypto. What sort of has come out since the election is that the Biden administration was covertly hostile towards the industry, debanking participants, not providing rules, and sending Wells notices to pretty much any crypto startup. So what we're going to see now under Trump is clearly quite pro-crypto. The difference is going to be from night to day, so a really huge boost for the whole industry. Trump also benchmarks his performance in terms of asset performance. So you know he has benchmarked himself against the S&P. He'll say, look, his equity market's flying. You're welcome. That's me. He's also mentioning Bitcoin in that same sentence now and repeatedly doing it. So he sees Bitcoin being higher as a benchmark of his success. So we think that's certainly worth keeping an eye on. His focus is still there. We talked about a Bitcoin strategic reserve a little earlier. This is what's happening in the States. So the States are also exploring a Bitcoin strategic reserve. There's 32 at the moment that are considering it and passing it through the legislative process. Not all of them will make it, clearly, but we think a bunch will, and they could be as meaningful an impact as the actual federal strategic reserve. We haven't heard much about the federal Bitcoin strategic reserve since the election, or even Trump taking office. And I think that's probably been a little bit of a headwind to the market at the moment. So we do think that to implement a Bitcoin strategic reserve, you actually have to do it strategically. And on day one, if he was to come out and say, we're going to buy 1 million Bitcoin, the whole world would front run him. And so that's not really strategic. What I think is more likely to happen is the recent announcement of a sovereign wealth fund gives the Treasury and the executive branch more ability to start their own crypto holding and turn that into a strategic reserve. And we know who's running that strategic, that sovereign wealth fund, Scott Bessent and Howard Lutnick, who are both big Bitcoin and crypto believers. So we think it's pretty certain that will happen. And I think the states also, are giving you a pretty good hint on where they think that the federal system is going to go to as well. Oh, and also the SEC. So I want to talk about the SEC. Obviously, they've been really hostile to crypto for some time now. Under Gary Gensler, that anti-crypto agenda is now finished. We've seen already a repeal of SAB 121, which effectively kept Wall Street banks out of offering crypto services. They're already into the market pretty quickly, and offering, bringing Bitcoin to a more financialized state that you can actually use it as collateral. So that's a really big move, and we think that and a positive SEC, we'll start to see a lot more IPOs this year, a lot more M&A, and a lot more activity now that participants can actually operate in this sector with confidence. So why invest in a digital asset fund like the MTC Digital Asset Fund? You get to leverage professionals' expertise. These markets operate 24/7. They're obviously highly volatile. They're fast-moving and really not suited to part-timers. So professionals are better able to find the alpha that is out there as well. So, and there's a lot of that. There's a real or information discrepancies out there as well. So professionals are better able to unpack that. The other benefits you get from a fund are obviously institutional custody. You don't have to worry about keys or wallets or these different counterparties. That's all wrapped up in one simple solution for you. Asset selection is also pretty tricky for most people as well, without having the time to do that research. And obviously simplified tax reporting as well. If you're staking assets, there can be daily transactions, and if you're doing that within your SMSF or wherever it is, your accountant is going to get a hell of a lot of transactions in a fund structure that's all wrapped up into the one spot, and you just get your unit price moving. We like to pitch ourselves as the most conservative way to invest in crypto through a fund. So what does that mean? It means, you know, we're high conviction and we do a lot of deep research, so we have a really strong belief in all the assets that we hold. We focus on the top 50 assets and don't really go out into the VC space, which has lockup and liquidity issues. We also don't use leverage or take short positions, so and we're not traders, so we think this really is a really simple way to investors to get good exposure to the asset class and really set and forget from their perspective. So just briefly on performance, performance has been really good recently. The last 2 years have returned over 100% since the start of inception for that A class. So it returns nearly 250%. And yeah, please, thanks for listening, and please come and have a chat next door to myself, Dean, or Asha. Thank you.
Good afternoon, everyone. It's great to be here, and thanks very much for your time. Over the course of this presentation, I'd like to give you an overview of the Pallas Group, our journey over the past 9 years to where we are today, where we sit in this ever-growing private debt asset class, as well as a summary of our various opportunities for investors. So the Pallas Group was established in 2016 and has two distinct parts to the business. Pallas Capital, which is the non-bank lending and investment side of the business, and Fortis, which is one of Australia's most respected property development managers, with a strong focus on the luxury residential apartments and boutique commercial office buildings on the city fringes of Sydney, Melbourne and Brisbane. The strategic relationship between Pallas Capital and Fortis provides many significant benefits, particularly when analysing loan applications. Being able to leverage off the internal expertise of a development manager who's familiar with the same areas that we lend to just provides another level of comfort for our origination and credit risk teams. So this slide tells a great story of Pallas Capital's growth over the past 9 years to our position today as one of the fastest growing non-bank lending and investment managers. So as you can see from this slide, we recently surpassed $7 billion in total investments managed since our inception in 2016. In that time, we've repaid $4.3 billion of that $7 billion back to investors, and we currently have $2.7 billion open and performing investments across 335 transactions. So additionally, we've paid $435 million of interest and returns to our investors. However, as impressive as all that is, the most important number you'll see on that slide is in the top right-hand corner, and that's the zero loss of capital or any impairments to interest payments for any of our investors. So when you consider there's been almost 1,000 loans written in this time, that zero loss of capital is significant, and it speaks to the high level of due diligence undertaken by our credit risk team. So when it comes to the composition of our loan book of over $2.2 billion, the average size of the loans we originate is $8 million, with an average term to maturity of 8 months. With regards to the loan types, the majority of our loans are construction loans and pre-development, and are predominantly located in the inner city suburbs of New South Wales and Victoria. So although in recent years we have significantly increased our lending capacity in New Zealand, which now makes up 14% of our total loan book. So looking at the commercial real estate debt market in general, the rapid rise in non-bank lenders reflects the structural advantages these lenders have over the traditional Big Four. Faster turnarounds and more flexible loan terms are the key reasons for borrowers shifting to non-bank lenders, and we expect this trend to continue. So in the US and Europe, non-bank lenders represent 62 and 53% of the commercial real estate debt market, whereas in Australia we're only sitting at 16%, so there's still significant growth to come in Australia in this CRE debt market. Additionally, as you can see on the right-hand side of this slide, the commercial real estate debt market is expected to increase from $484 billion as at June 2024 to $635 billion by 2028, with non-bank lenders forecast to more than double their market share from $74 billion to $152 billion over that same period. So when it comes to what Pallas investment opportunities Pallas Capital can offer, we can offer investors both diversified pool funds that invest into a portfolio of first and second mortgages, or alternatively, investors can invest in specific loans as a single asset investment opportunity. So just taking a look, as you can see here, when looking at diversified pooled funds, we have 5 funds available to investors. Working from left to right, the first of those is our most liquid fund. That's the Pallas Short-Term Fund. That has a 3-month redemption notice period, so access to your funds after 3 months. The loans that sit within that fund are all first mortgages, but have a shorter tenor of approximately 8 months, and your investors are receiving a return of 4.75 plus BBSW or 9%. You'll notice with all of our funds that there's a fixed component with a floating bank bill swap rate attributed to it as well. Moving along, the Warehouse Trust number 4, that is our non-construction facility. So for those investors that don't want to have exposure to construction loans, this is the fund for them. Again, first mortgages, in this case it's a 6-month redemption notice period. And there's 5% first loss capital protection. So that means if there's any impairments to a particular loan, Pallas Capital's got 5% of their own money in that fund, and that they're the first port of call if there's an issue there. The Pallas Warehouse Trust number 3, that's our flagship fund. It's our original and largest fund. It's a first mortgage fund as well. 12-month redemption notice period there. Again, 5% first loss capital, and investors are receiving 10.75% per annum. For those investors that are seeking higher yield, we have the High Yield Fund number 2 and High Yield Fund number 3. So the High Yield Fund number 2 is a portfolio of first and second mortgages. With regards to second mortgages, they're leveraged up to 75% LVR. 12-month redemption notice period there, and investors are receiving 13.25. And then finally, the Pallas High Yield Fund number 3. This is our newest fund. It's a mix of first and second mortgages, but as well as that, we have preference equity opportunities in there. So a little bit higher leverage. It's been very popular. It was only established in August of last year when we're close to 150 million. It's almost a capacity in that fund. 12 months redemption notice period and almost 15% per annum. Now, as I mentioned, in addition to the diversified portfolio funds, we also have single asset opportunities. So this is where you can invest in a specific loan, whether that's a first mortgage. Just move along. My clicker's stopped working. There we go. First mortgages returning, again, leveraged to 65 LVR on any of our first mortgages. Returns sit somewhere between 9 and 12%. Second mortgages up to 75% LVR, and you can expect returns around 12 to 14. And then the preference equity. So we offer preference equity on our sister company Fortis on their developments. They're very popular with investors, obviously with the higher yields, so you're getting close to 18 or up to 18.5% there. But more importantly, they're all capital guaranteed. So the sponsors provide guarantees over your investment. So there's no risk of loss of capital on those investments. So they're extremely popular. And I'll just provide you on my last, as I finish up, a typical first mortgage. This is an example of a current first mortgage opportunity that we currently have available. You can see it's based in Manly in New South Wales. This is actually a Fortis development. Very typical loan in that it's a 65% LVR, 18-month term on that one. It's paying 6.5% plus BBSW or 10.75%. So that just gives you a bit of a flavour that if you're looking for an investment, a typical first mortgage, that's the sort of investment or sort of first mortgage that you can expect to invest in. I'll leave it there. thanks very much for your time. I'll be over at the Pallas Capital booth for the rest of the afternoon, so feel free to drop by and say hi. Thank you.
Thank you for joining us today at the Emergence 25 conference in Dubai. My name is Damien Trubsol. I'm the Head of Investor Relations and Company Secretary of Rapid Response Revival. And I would like to initially play you a video of 2 minutes just to set the scene of our business and the exciting life-saving technology we're bringing to the market.
When it happened, we happened to be in bed. I was studying for an exam for my MBA. I looked over and Sarah was making clucking sounds, chicken sounds. That was her trying to breathe. You get that realization and the horror of that. You want someone to save you. I was on my own. Everything that I went through is imbued in the product. She was asystole or flatlined for 40 minutes. The CPR bought her some time. When the paramedics told me that I had saved Sarah, imagine if I just stood there and had done nothing. Most people die after sudden cardiac arrest. They die because they're too far away from the tools needed to save their life. We can't do anything about the unpredictability of sudden cardiac arrest, but we can be prepared. When Sarah almost died, I was a customer for a device that didn't exist. So we invented it.
So every 5 seconds, somebody suffers a cardiac arrest. 80% of them occur in homes. Cardiac arrest kills instantly. AEDs, or the cell aid, is the only therapy for treating somebody in a cardiac arrest. And unfortunately, despite best efforts, survival rates have been less than 10%. A sudden cardiac arrest nearly took Donovan's partner from him. He saw a new solution, which was the cell aid. Cell aid opens a new and much larger market for home safety and emergency response in the future. Cell aid breaks the key barriers to ownership: high affordability and compact and lightweight ultra portability equal access. We've also designed our device to be intuitive to use and also incorporated connectivity to lower the customer's maintenance, improve our business's ability to monitor the device for rescue readiness. So when you pull it off the wall or out of your backpack, it is ready to go in an emergency. The market potential for key customer segments is significant. AED should be at least as ubiquitous as fire extinguishers because the risk is much higher than fire. Homes and businesses make up approximately 50% of the addressable market for cell aid. The company has already a significant pipeline of opportunities across all consumer segments and channels. The business model of rapid response and the cell aid revolves around device as a service. We have access to multiple channels, leveraging the traditional path to market, which is B2C, but opening a new channel to market participants through direct to consumer, and also having an incentivized market growth through government engagement, particularly in those regions of the world that are redeveloping and reimagining their whole emergency services profile. We're the first AED to sell directly to consumers, so we have validated that channel. And the profile of our customers in the early adopters include those with Cell aid has proven there is a new market for AEDs when the value proposition and technology is right. We have validated the device as a service model. We have validated the direct-to-consumer model. And we partner with resellers, engage with training organizations, as well as corporates and other customer bases for medical devices. Our current customer profile aligns with the largest market opportunity we see, which is those who have experience as health professionals, as well as those who have an experience in cardiac health, either as a patient or having close relatives. Cell aid is the #1 selling personal AED, and we have delivered over 25,000 devices to customers in the last 2 years. Our team is capable, and the execution that has taken CellAid from idea to commercial within 5 years highlights this. We have built a sales platform and relationships to commercialize CellAid at scale. We have real-world clinical evidence of the safety and effectiveness of CellAid. The IP developed internally is protected across major customer and manufacturing territories, and we also have attained and maintain multiple regulatory approvals. We are currently planning our first submission into the US FDA sometime in the calendar year 2025. We have established Australian manufacturing and have the capabilities with effective factory-in-a-box strategy to expand and scale our manufacturing regionally and internationally. CellAid and AED awareness is growing with legislative support, and we are looking to develop a well-capitalized business that is poised to deliver value in the near term. We have an experienced and mission-aligned team and board. We have extensive experience in resuscitation science, emergency medicine, fast-moving consumer goods manufacturing, engineering, and marketing, and regulatory. We are developing a board with a focus on US-based experience. The first new board member, independent Albert Kelly, on that page there, has over 50 years of experience in medical devices, including with major players in the AED market. So in closing, we're here to save lives. We are targeting 100,000 lives to save by 2030. We are bringing game-changing technology to the world's homes. Join us, visit us online, or get in touch with me at cellaid.com.au or via email. I thank you for your time and hope you enjoy the rest of your conference activities. Thank you very much.
Hi everyone, my name is Chris Ventura. I'm the CEO of Harness Projects. We're a global education and talent company. We founded Harness Projects in 2018 to bridge the gap between education and employment. We believe in creating a world where individuals can learn by doing on real-world projects showcasing their unique abilities to employers, and at the same time have companies hire with confidence instead of gambling on unproven talent. So our mission is twofold. For our students, we solve the classic job experience conundrum. That is, you can't get the job without experience and you can't get experience without the job. And on the employment side, we help hiring managers try before they hire, observing talent perform in real-world work environments before making that critically important hiring decision. At the core of this model is a real project learning framework that we have developed and designed over the past 7 years. This framework directly integrates company projects into the student learning experience, providing real-world experience and skill training all in a single course. See, project experiences are where we build not just our technical skills, but our behavioral skills as well. Things like critical thinking, resilience, leadership, communication, and collaboration. All the skills that make someone great to be part of your team. Now, in this example on screen, we have our UX design real project framework, where students complete 3 projects with companies like HSBC, IKEA, and The Big Issue. Each project focuses on a certain technical skill area that the student is developing, and the overall experience elevates their workplace behavioral skills. Our network of industry mentors guide these students through their projects and provide assessments on their employability across 36 technical skills and behavioral traits. So while students are learning, employers are observing. They're getting to see who is the most promising talent with hard evidence of their capabilities. Now, we do this through our employability scorecard. This is a tool that we developed to assess and highlight performance across 36 technical and behavioral skills. The benchmarks for these skills was generated with input from some of the world's leading hiring managers. And these are relationships that we have developed over the last 7 years from companies like Google, Tesla, Atlassian, and more. This provides us access to a high set of quality industry data across some of the largest employment teams in Australia and the US. See, data like this is a significant opportunity for us because it gives our companies deep insights on talent that you can't find in a traditional recruitment process. Now, I've crammed a lot into this slide, and it's because we've done a lot. Over the last 7 years, we have partnered with over 125 company partners, brands like IKEA, HSBC, Qantas, Westpac, Greenpeace, and many more. We have completed over 200 projects and expanded our programs from Australia to the US market in 2022. Our customer feedback is exceptional with over 4.7 stars on Trustpilot, which I can tell you in education is market leading. We've delivered projects in design, cybersecurity, product management, and digital marketing. This is just the beginning for us. So we've set some strong foundations for the scaling of our model. The B2C side of our business is generating strong product market fit in 2 markets with 40% year-on-year revenue growth and 65% gross margins. We're monetizing the B2B side of our model as companies pay for talent who perform on their projects. This completes a growth flywheel where one side of the model is providing engagement and value to the other and vice versa. We're further investing into technology to scale our data collection and provide hiring managers a deeper level of insight into candidate performance throughout each project. Now, how many of you have hired someone only to feel that they weren't the right fit for your role just a few months in? Hiring managers often have to make these critically important hiring decisions off a limited set of interviews, leading to bad hires and the risk of a lengthy onboarding process before someone is even productive. We've all had this experience. Our model changes this with a try before you hire approach, ensuring new talent can be chosen on a robust set of experiential data points, producing highly vetted and productive team members from day one. To ensure our company partners have access to all the deep insights that we collect on the participants in our projects, we are investing further in an employability data platform, a platform that can surface workplace behavioral skills to hiring managers and help them make really informed hiring choices. Now, we're able to do this because of all the work that we've done over the last 7 years with our real project experience framework. All the way through a participant's project, we collect data on how they show up in the project. Did they demonstrate resilience? How did they present? How did they communicate with each other? All those nuances that you can't necessarily find out in an interview process. Now, one of the larger demand areas that we're hearing from our partners and mentors is in cybersecurity. Earlier last year, we launched our cybersecurity real project experience framework, and we're now the only company in the world with a fully project-based cybersecurity course from day one all the way through to graduation. The addressable cyber talent market in the US and Australia is 5.6 billion, and this is just one of the skill areas that we're targeting. Our goal is to have coverage across all the major high-growth digital skill areas as a global workforce is going to force to pivot from into new roles due to AI's disruptive effects. We occupy this really unique space between your traditional boot camps, universities, and talent provision services. Unlike boot camps that focus solely on training, we help students get real-world project experience through our curriculum. And unlike internship platforms or placement providers, we offer real-time visibility into a candidate's performance in a structured, methodical way. This makes us a really logical choice for companies who don't have the resources to invest in their own internship programs. So in 2025, we're focusing on 4 key strategic initiatives. We're continuing to grow our B2B partnerships and expand this talent as a service model across cybersecurity, design, and data science. We're developing a B2B2C marketplace platform to bring our students and our companies together under the one experience, providing transparency into a candidate's skills for the hiring managers and a pathway to employment for the career changers. We're continuing investment in our employability scorecard and conducting further mapping of all the experiential data points that we have in our model. And we're collaborating with the Digital Health Cooperative Research Centre and the University of Sydney on a data science real project framework. This last one is a really great example of some of the organic reach out that we're starting to receive from government and universities alike about our model. Our team has a proven track record of tackling tough challenges. Over the past 7 years, we've built a world-first educational model and scaled this across Australia and the US. We've taken market share from highly funded VC-backed competitors, and we've done this all as a bootstrap company. We raised a small family and friends round in 2022 as we brought on our board of advisors, and we're now really well positioned to take the next step in our growth. My co-founder, Mike O'Brien, has over 25 years of experience in academia and education. My background is in digital product management. I was former head of digital at Laureate Universities, and I bring a product and commercial lens to the work that we do. We've been really fortunate to have the guidance of some exceptional advisors, including board members as the former MD of Seek Education, the former MD of Spotify and Peloton Australia, and the former CTO of Laureate Universities. We're now seeking $2 million to fund our growth plans and realise our vision of bridging the gap between education and employment. Key roles include investments in technology, sales, business development and product. And we feel that we're incredibly well positioned to be the go-to educational and talent model in a world that is rapidly changing due to AI advancements. The next generation of career changers, it'll be critically important for them to showcase their behavioural skills, all the human skills that will make them employable in this future workforce era. So thank you. If you want to get in touch with us, we're in the exhibit hall. Love to have a chat and talk more about our model. Thanks a lot.
Hey guys, I'm the founder of CHEFIN, and we are a booking marketplace for private chefs. We've been running for a while. We've got over 6 million of revenue, and we want you to actually invest in entertainment. Entertainment can be turned into investment with CHEFIN. We are powered by a really, truly amazing community actually of private chefs and individuals. We change people's lives. We've had people meet their wives through dining experiences. We've had chefs save and open their own businesses and flourish. We have chefs traveled across the whole of the United States or around the world to actually cook for individuals, and we are quite proud of it. At the moment we are doing a crowdfunding race and also a wholesale investor race as well. So everyone is welcome to join on the journey. I want to talk today about the dining revolution. The world started dining for a very long time. Obviously, everyone's been eating at home with mums and grandmas cooking. But in the 1800s, the first restaurant sort of appeared formally in France. And then it sort of moved into that digital fast food economy, everything moving really fast, and then into the digital e-commerce economy where you can order takeaways and order things online. And today, we're really about experiences. People want to actually feel connected. They want to have memories about a particular experience and something that they'll relate to in the future. Our customers like to say that the way we make them feel and the way that we make them sort of look impresses their guests and makes them feel special and memorable, and these experiences they talk about for many years to come. We have one of our really cute customers, Kelly, in Kellyville, actually, in the Northwest. She orders a private chef every year for Christmas, and it's the moment that the whole family waits for with excitement. They pop up some lollipops, they have their own little branded cups with the name of every person on the cup, and they celebrate with a private chef every year, a family Christmas. It's amazing. Yes, as I mentioned, we've done 6 million of revenue so far. We're running on 1.4 million ARR every year, and we're growing up 700% in the US. Something that's really interesting for us is that we notice all the luxury brands around the world actually starting to play into this space. We've got LVMH purchasing a fine dining restaurant in France. We've got Armani and Bulgari owning hotel chains and getting into the luxury hospitality space. We've got obviously Apple inventing the experience stores and then everyone copying them, from like Tesla to Cupra and to Microsoft and everyone else wanting to actually do experience stores. And then very interestingly, we've also got the Vogue Cafe here launching in Sydney in Darling Harbour. So all of these brands are sort of trying to dip in into the experience space, into the hospitality, and connect with consumers on another level. We are the experts of it, and we've been doing it for a long time. It's a very big market. I think not many people talk about it. but we have a very niche and very targeted audience. We are targeting billionaires and millionaires around the world, the top high net worth individuals. This population is actually growing. It's more than doubled in the last 20 years, and it's going to increase by another 19% in the next 4 years. So our market is growing. It's worth over 140 billion. And it's a very, very nice and attractive market. What is the really interesting part of it is that there's no one player that actually dominates this market. So we're here to actually shake it up, dominate the market, consolidate it. We've already started purchasing little businesses. We tried to enter the US like in 2022. It took us like almost a year to actually get to establish a footprint and convert deals there. And we did that by actually purchasing local small businesses, onboarding them into the platform, digitizing them and turning them from little catering and individual chefs to a private chef marketplace, basically. The other thing that is also interesting about the market is we have around 2 million millionaires in Australia and 25 million, so almost half the world's millionaire population is based in the US. So the US is a huge market for us that we are targeting. We're growing every week. We have 13% weekly growth, and the experience economy is very highly profitable. In comparison to traditional hospitality and old school businesses, where the margins are shrinking every year, your rents are increasing, it's harder to actually operate. We have very stable and increasing profits year on year, and we are able to self-fund ourselves. We have 12 months runway at the moment. We are cash flow positive. We've grown ourselves to Hong Kong. We've expanded to Brazil, and we are almost launched in France. We've done the website, and the tech is adjusted, and we are ready to launch in France, basically. So what we need is capital so we can scale. We have a really nice order value. Average order value is $2,465. We have a very strong luxury brand with a great presence across consumers, very high NPS, 90 NPS, satisfaction on every booking. 60% of people actually come back to us and tell us what they've experienced, and it's all positive feedback. So really enjoy that. We had negative feedback in the beginning. We learned from it. We improved a lot of things in the platform. We improved how we actually match customers with guests. Our real sort of moat, if you want to call it, is how we actually match the right chef with the right customer. It's a very complicated process that we've digitalized and created an algorithm for. And at the moment, we have around 98% success rate on matching the right chef to the right customer and creating the right menu from the first set go, which is amazing. So we've built that in our tech. We've served over 110,000 people, 117,781 as of yesterday. We have 1,035 chefs when I checked, and we have chefs across 116 cities in 16 countries. So we're ready to actually launch in these countries. We've got the landing pads. It costs us around $250 to actually acquire a customer, and that gives us a 10x return on every dollar that we invest into the business. From $250, we turn it in $2,465. So it's a really good return investment. We've been doing that ourselves with bootstrapped cash. We've been growing significantly like that. And another thing that is really interesting for us is that we have a very strong referral growth engine. All the customers that attend and the guests that they invite are potential customers for the future. They get to know about the brands, they connect with us, they may attend multiple dinners, and we usually have around 3 referrals on average from every single dinner that we do. So you do 1 booking, we take cash, we get 3 future customers coming through. So it's a great opportunity to actually scale the business. We make $4,000 over the lifetime of a customer in pure profits. That's around $12,000 in booking value. Customers stay with us for 9 years, 6 years, depending on the customer, and they book every year around 1 to 2 events with us. Our customer acquisition to LTV ratio is 7, as I mentioned, so it's really good. I've got a really sort of pretty chart here, which can be a little bit confusing, but it's a really interesting chart because we've actually spent a lot of time validating what we're doing. We've spent time to understand the industry, to learn about the market, to learn about chefs and the customers and the hospitality in general. And we are now into the scaling stage where we know what works. We have clear path to profitability because we're bootstrapped at the moment. And we also know what our return on customer acquisition is. We're looking for $3 million in growth capital. We invest majority of the capital into acquiring customers and growing across different regions, 36%, and then 20% in engineering to actually continue improving the product based on customer feedback and be able to launch in new markets. And then we want to have some cash for cash reserves and also for corporate partnerships and hiring people. We've got a very good diversified team, many years of experience in IT, market research, customer experience and branding. And we are based across the world. Luigi is in Italy, Marek, Suki and I are here. We have team in Poland and we also have team in Brazil and in Austin in the US. And we are offering a bit of a sweetener. For anyone that invests over $100,000, they'll get a lifetime chef supply. So every year you're going to have a chef coming to you and cooking for you for a birthday party, anniversary, or whatever you want, once a year. So invest and turn entertainment into investment. Thanks, guys.
Good morning, everyone. It'll just be me today. My co-founder Mike's sitting over there. You can't miss him in the yellow, so have a chat to him after this and the break. So my name is Ash, one of the founders of the Startup Nerds, and we're on a mission to help businesses succeed. We've got something incredibly exciting for you today. We're bringing 5 startups to the stage who'll come up after my presentation and introduce their ideas to you. They hope to increase awareness of their brand, to unlock opportunities for growth by having those right conversations, and also to raise capital. Before I introduce them to you, I will tell you a bit more about our point of difference. So my co-founder and I started in 2022 offering a startup ecosystem of services tailored towards helping them succeed. And we stumbled across a business that had struggled to raise capital for the best part of 18 months. It looked really interesting, so we took a look into it. And what we found was the business had all the bells and whistles we felt an investor would be interested in. It had great market opportunity, incredible founders, a track record of execution, and was in disruptive tech. And so even with all of these bells and whistles, it still struggled to find capital. So we took a look into the investor strategy, and what we found was it was not the business that was the issue, it was the way it was being positioned. And so we worked alongside those founders and tweaked a couple of things. We didn't change the business model, but what we did was unlocked exactly what was underneath and always there. The outcome of this was the business was successfully funded in a seed round and is now on its way to generating $2 million of ARR just 6 months post-funding. An opportunity that would have been lost if it was not successful with its capital raise, and not only for the investors like you, but for the Australian economy. And so we work alongside founders, or the moral of the story is, great opportunities don't often go unnoticed because they lack potential, but because they aren't positioned effectively. And that is essentially what we do with our capital raising assistance. We help the founders to unlock their true potential. Now, before I introduce the startups to you, a bit of housekeeping on how to get in contact with us. So a couple of ways. You can scan the QR code on the screen and fill in your details. We've also got some flyers and business cards flying around in the exhibition hall. We do have a trade stand, will be available today and tomorrow, so come chat to us. We'd love to hear from you. And then all of the opportunities here today will be available on Capital HQ. Now, without further ado, I'd like to introduce to you the first startup to take the stand. And please welcome the founder, Ahmed Salim, all the way from Western Australia, where he'll chat to you about Podyssey. Thank you.
Thanks, Ash. So my name is Ahmad. I am the co-founder and CEO of Podyssey. But prior to starting Podyssey, I used to work as a geologist, and a large part of my role was travel. I traveled a lot. For about a 10-year period, I averaged 330 days on the road. So 11 months of the year I was on the road. And travel is great. You get to do a lot of cool things, get to see a lot of cool places. But the part that sucks about travel is all the downtime that you have, all the time that you spend sitting on planes, sitting in airports, sitting in cars, going to airports in traffic, all of that stuff. And you need a way to kind of use up that time. And my companion during that time was listening to podcasts. So I listen to a lot of podcasts, If there's a name of podcast, then I'll probably listen to it at some point. And okay, let me just move on. And so podcasts are great because they've been this really exponentially growing kind of medium. So you're never lost for choice. Yeah, there's like, you can look at the numbers on the board. There's 6 billion minutes of content on podcasts, and every year it grows exponentially. Every year there's about 250,000 new podcasts that come out every year. And so as this content has grown more and more, as a user, it's great. But it's created this problem where the discoverability of that content is getting harder and harder. So if I want to find new content, or even say I want to go back and rediscover the content that I already listened to, that's becoming harder and harder. And I'll give you an example. Like, say I listen to a podcast. It's usually an hour long. Some are several hours long. And in there, they had a 10-minute clip where they talked about, say they told me a piece of trivia about Roger Federer, the tennis player. Now, if I wanted to go find that content again, the only way you can currently do it is you'd have to go search the podcast title. It's highly unlikely that they're going to name the podcast after the trivia piece of Roger Federer. Or the episode title, again, highly unlikely that you could find it using that. Or you could use the show notes. And that you can find things using show notes, but not every podcaster puts show notes. I was a podcaster and I never put any show notes on any of my episodes. So how do you find this content? And what I found as a podcast listener was, at one point, how come there's not a Google for podcasts? Like, how couldn't I just go into a search engine and just type that little piece that I wanted to find, and it would just go find me that content or that little clip that I could just listen to? How come that doesn't exist? Imagine imagine you had to search websites, but all you could search for was just the address of the website. Like, that would be a really dumb way of searching. And so one thing I thought of is, like, maybe this is just a me problem, right? Maybe I'm the only one that has this problem. Maybe the market doesn't have this problem. And then you go look at the market of podcasts, and it's huge. So there are about 500 million active weekly podcast listeners. And this market is growing exponentially. The value of that market is growing as well. I mean, if you really think about what the value of podcasts is, the current US election kind of showed that, or how important they become as a source of media for a lot of people. So this wasn't a me problem. Maybe this was a we problem. Maybe there were other people, 500 million people that had the same problem as well. And so I always ask the question, why wasn't there a Google for podcasts? So I decided to build one, and that's Podyssey. Podyssey is effectively a search engine that allows you to search all the podcast content. So aside from just titles, it will search through the whole episode for any content that you want. And the way it does it is that we take an episode, say an hour-long episode, and then we break it into, using natural language processing and a few other AI tools, we break it up into the topics that people are talking about, and we create those into small clips. And then we tag them by those topics, and we tag them by who's talking as well. So now you can search through any podcast episode by the what, so what people are talking about, and the who, or who's talking at that same time. So now if I wanted to find that same clip about Roger Federer, all I have to search is trivia about Roger Federer. And if I remembered who was talking, I could just search for them, and it would go give me that clip. But then it would also give me all the other clips and all the other podcasts and episodes where they've talked about Roger Federer. And I could create a whole podcast, essentially, curate my own content about Roger Federer on all the podcasts that have occurred. And so we built this app. We just go back. So we built this app. It's out there now. It's live. And we built it for listeners as well as content creators. So if you're a listener and you want to find content, you go on the app and do it. You can use it free, or you can pay a subscription, and you can get a lot of other features. And the same as a content creator. And this is probably one of the first platforms that allows content creators to do this as well. So if you create your own podcast, you can put that content on our platform. We'll separate it into small clips, and you can go and then use it for social media marketing or whatever else you want to do to kind of increase your listener base. So as I mentioned, we're an app. We're already in the market. We started at the start of this year. Currently, we're the only app that allows this functionality. We're pre-revenue, so most of our users are all still free, but at some point we'll start charging them. And so we completed a pre-seed round, and we've got pretty good feedback from VCs, mostly overseas. So we'll extend this round and we'll raise a bit more capital. And what we want to do with that capital is basically grow not just our team, but the app to aim to get to 1 million users, and also build more features out into it. Now, the obvious question that you should ask if you are a podcast listener is, how come Spotify doesn't do this, right? And that's a really good question, and I'd love to answer it, but I'm out of time. So if you'd like to come to the booth, the Startup Nerds booth, I will happily answer that question for you. Thanks a lot for listening to me. Cheers.
Thanks very much, Ahmad. That's very interesting, and I'm an avid podcaster myself. The next startup to take the stage is a female founder, which is very exciting. They are looking to revolutionize the way we troubleshoot using our IT applications using AI. Please welcome Inshu Mishra from Bula.
Yeah. Good day, everyone. Thank you for giving us your time to listen to us. And I am Inshu Mishra, founder and co-founder and CEO of Billier. Billier is an acronym for Build Your Future. Future, that we've all been talking about, has long been lurking at the door, which is now standing right in front of us. AI. Everyone is talking about AI. But what are we going to do with AI in our respective industries? That is the question. So we at Billier, we at Billier are bridging the cloud skills gap by AI-driven expertise for maximizing the cloud ROI. The next question is, why? Why are we going to do this? So let me tell you an example from my experience. I have been consulting for 14 plus years as a technical architect in cloud ecosystem. Well, having worked as a technical architect in different geographies and solving multiple issues with the digital transformations that companies face having worked as a technical architect in different geographies, serving 50 plus clients, I have come across so many issues that the companies face while on the journey of their digital transformation. One such example that I would like to highlight today is when I was hired as a technical architect by a company, by a startup who had raised over $200 million over a year ago. And the issue they were trying to solve was integrating their AWS system with Salesforce for making the data transition as smooth as possible, because the Salesforce had their identity application and AWS had their cloud application. So the transition that was happening was storing the token in an intermediary database, which was highly unsecure, and they were trying to solve it to make it secure. In short, they were trying to get their customers sign into their application seamlessly and securely. It sounds simple, but given their architect, who was an AWS solution architect, who had little to no experience in Salesforce, the architecture was designed by him. 2 years later and $1 million later, it was finally fixed by me in 3 months. What I did was nothing but just advise them with my experience that Salesforce works in a different way. Fortunately, they had the luxury of affording that mishap, but 70% of the transformations fail, and companies potentially go bankrupt in doing so. So we did some digging to figure out businesses are investing heavily in cloud. Businesses are investing heavily in cloud platforms like AWS, Microsoft Azure, Google, and Salesforce. Yet more than half struggle to realize the full business value from their cloud investments. In a global cloud computing market that is predicted to surpass $1.6 trillion by 2030, that is a critical skills gap and lack of timely expertise leave companies with underutilized technology, inefficiencies, and lost revenue opportunities. So there must be a better way. Our solution, our AI-powered platform bridges the cloud skills gap with a team of AI-powered agents that provides instant troubleshooting, strategic insights, and talent recommendations, empowering businesses to fully leverage their cloud platforms and maximize their ROI. How it works. Our AI, how it was. You submit your query to solve, for example, the issue that we just discussed. You submit your query to solve the AWS app architecture with Salesforce Identity Solution. You receive an AI-powered insight. If that is not enough, you get to work with a human who is an expert in both the systems. When you get your desired outcome, our AI improves itself based on the knowledge shared in that session, making your next query resolution seamless for your team's enablement. Voila, your idea to execution becomes almost instant, creating less tech debts and allowing you more time to do the actual business. Our AI is under development for no hallucination and verified data with active responses and decision-making capabilities, leveraging our specialized expert network, taking care of your data privacy and security compliance. Our ask is we need an initial investment of $2 million to accelerate the product development, expand the expert network, to invest in R&D and technology, to achieve our MVP and a go-to-market strategy to expand our product footprint. So here we are, Sean, Deepthi, and I, available all day today and tomorrow to answer your questions and concerns. We are a team of 3 technology leaders on this journey of helping businesses build their future on AI, on artificial intelligence, powered by the most intelligent species, that is humans. Thank you.
Thank you very much, Inshu. Our next presenter is coming from an industry which I know we all love, and that's real estate, but not just any real estate, it's commercial, and add that with prop tech. So I'm sure you'll all be interested to hear from Andrew Brown, formerly known as Brownie, of Lease Suite Technologies.
Good morning, everyone. Thank you, Ash, from the Startup Nerds. My name's Andrew Brown. I'm the CTO and co-founder of Lease Suite. So Lease Suite are empowering the large business occupiers and commercial real estate industry with AI-powered portfolio and transaction management software. Here we go. So we are giving you the control to take control of your commercial real estate. And we're doing that through technology which seamlessly connects in lease and facilities management, lease procurement, portfolio management, financial reporting, occupancy analysis, and energy management. So what problem are we solving? On the macro industry level, there is a severe lack of investment when it comes to commercial real estate tech versus the residential tech, which I think everyone in this room would probably agree on. When it comes to portfolios of leases, they're still being managed on disorganized spreadsheets and other disparate manual collections of data. When it comes to leasing transactions, the processes there are no different than what they are today and than what they were 30 years ago. On the asset owner side, they're not empowered with software, so they can't maximize their data and reduce their income downtime and boost total returns. When it comes to the macro level, on the user level problems, commercial real estate is simply broken. When it comes to lease management, leases are complicated. A commercial real estate lease is complicated. It's not a set and forget document, and it's filled with booby traps. So if you miss a key date or event, this can have major financial consequences. When it comes to the transactional side, occupiers lack that insight and control on how they actually do transactions. Key data can be missed, misunderstood, which can lead to slow, expensive deals being completed, or you can miss out on options. As for the asset management side, when it comes to small funds, REITs, and family office investors, they simply lack the systems to effectively understand their leasing pipelines and investment performance. Our solution, Lease Suite. So we're enabling and empowering all the participants in the commercial real estate ecosystem. We're 3 products. Lease Suite Premises, which is portfolio management software for the occupiers. which provides rapid access to lease data to make better decisions. LeaseSuite Procure, which is AI-powered transaction software that slashes that project delivery time and costs. This product doesn't have any peer in the market, so we're getting real traction on this second product. Our third product, LeaseSuite Portfolio, for asset management for building owners, bringing investors closer to the data that increases their income and total returns. So what's the long-term vision of LeaseSuite? Well, like I've mentioned, we've got 3 products. 2 of those products are in market, being Premises and Procure. Our third product, the Portfolio for the landlords and the family-owned, will be available, and MVP will be available at the end of this year. So these products essentially will be profitable in their own right. And we'll add other products and other spin-off products to this ecosystem that we're creating, where it be agents will connect into this. There'll be fit out and construction, so forth, make good. Again, building an ecosystem here. And then with time, with data, and with just building trust, essentially what we're doing is building a marketplace here, which is the longer term vision. So a future marketplace solution is really enabling those tenants and the landlords to engage and transact faster and a lot cheaper. And then with further innovation, I mean, AI-powered predictive modelling can be done, matchmaking for leasing transactions, and adopting smart contracts and getting into blockchain technologies. Our market traction and investment plans, we're closing the final 300K on a seed version 2 round. We've raised 2.6 million, so we have runway secured into 2026. On top of that also, we are eligible for the R&D rebates, so about approximately 300K on top of that, which also gives us further runway. We have 2 products in market, LeaseSuite Premises and LeaseSuite Procure, which I've already highlighted. We have contracted sales, so we're not at an early stage. I mean, whilst we are still early stage, we are making revenue. So we've got proven revenue, and we're locking customers into 2-year contracts. We have our third product, LeaseSuite Portfolio, which is the MVP, will be available at the end of this year. We have a major capital raise plan for the first half of 2026, which is all about product expansion, and that will also go into the expansion into APAC markets planned for 2026. I'm Andrew. I've been in the PropTech space for 21 years. There's our other founder, Mike Steele, who is the commercial real estate industry expert. So 2 middle-aged men, seasoned vets who have been in this space, know the environment. We're hungry. We want to smash this, all things sales 2025. And then come and have a chat with us. We're at the Startup Nerds tent next door. Let's have a chat and let's be part of transforming commercial real estate industry from something that's very offline to online. Thanks, everyone.
Thank you very much, Andrew. Next to the stage, I'm going to introduce an AI solution in the generative AI space. And this tool can automate what a team of 7 content producers would otherwise be doing, almost at the click of a button. Please welcome Darren Carey and Andrew Jackson from Syndica.
Thanks, Ash, and thanks for everyone being here today. Very excited to meet you all and share what we've got for you. So I'm Darren Carey, as Ash said, the founder and CEO of Syndica. Syndica is dedicated to revolutionising content production through vertical AI agents. Sounds really technical and geeky, but we'll go into that and we'll let you know a bit more about that. Got to learn how to do that. So the future of workflows, AI is actually unlocking, unsurprisingly, a $58 billion additional market. It's transforming the way businesses operate. So it's not about generating new, smarter software. It's about creating much smarter workflows. That's what's holding companies back. The AI technology is already there. If you think about it, the relentless demand for content to be produced is huge. It's expensive, it's manual. So their processes remain fragmented, time-consuming, and of course, very expensive. So let's talk about the problem and how we actually came about it. And this is really interesting for me, and I hope that this penetrates with you. We had a client who is a large sporting company here in Australia. They have a website, and every single day they have 7 content producers working there. They go to all of the sporting associations' websites in the morning, in the afternoon when news is released. They get those stories, they download them, they rewrite them in their own little tone of voice for their brand. Then they've got to change it for whether it goes up on a website, whether it goes up on their social media, whether it goes on any platforms. So their CEO rang me about 15 months ago and he said, Darren, this ChatGPT, it's awesome, it's great. I can put these stories into ChatGPT, ask it to make it a little bit more serious, a little bit funnier and whatever, but then I've still got to copy that content. I've still got to log into my content management system. I've still got to go and change that content or ask ChatGPT to change it again for the social media, for Facebook. Surely you smart guys can actually do something about that and make that a bit more automated. So there was that hint about what is the automation opportunity of the AI. So we built a proof of concept with that initially, and we actually proved that we could actually, using the AI APIs as well as Amazon Bedrock, we could do everything that ChatGPT could do. We could set up the searches, but we could also make it automate and connect to the client's platforms without having to sign out and sign back in. But no one wants to reinvent the wheel, so obviously we did some other research. Unsurprisingly, to date, as far as I can see, there's about 41 companies out there on the web around the world saying that they do automated AI and all the rest of it, everything from generating everything you need for SEO and SEM to doing your ads, podcasts, you name it. I've signed in and paid for at least 12 of them and tested them. None of them actually have this automation that they claim to do. None of them actually help solve problems. Once again, though, really wanted to not reinvent the wheel and waste my money. It was almost surreal to me that with all these companies out there and this huge opportunity with $58 billion market growing, that someone hadn't already done this. So luckily I have a relationship and a connection with the CEO of Amazon Australia. So I went and caught up with her and I said, Louise, am I wasting my time? Are you guys doing this? Is someone else doing this? Are there people doing this? And amazingly, again, I still pinch myself. She said, no, Darren, actually there isn't. And one of the biggest complaints that we're getting back from the market here in Australia from our companies is this AI is great. Everyone's raving about it. Everyone's saying AI is the future. But how can Amazon, how can we use it? How's it actually going to save us money? How's it going to make it more efficient? Following on from that, we actually had 7 meetings with Louise and the exec leadership team, which I'm extremely appreciative of. One of the greatest people and bits that helped us in there was Romain, who's their solutions architect at Amazon for AI. And he again reiterated that there's no one out there, even the big publishers that were trying to do their own things with AI, hadn't done what we'd managed to do even with just the MVP proof of concept. He had a few suggestions for us, which was great, and we took them on board. But excitingly, some of the things he said, which I'll go through in a minute, we actually saw what he said was great, and we went 10,000 steps higher, and we're actually in the process of submitting patents with some of those features. So the problems are clear, just quickly on that. In the market, generating high-quality content at scale is obviously a problem. Lack of consistent tone of voice, right? So all these businesses from 7, 9, SBS, the pool company, everyone loves to have their own tone of voice. It's critical to their identity and their business brand. Some of them having multiple tones of voice, and it gets even more difficult when they want to keep that tone of voice not only in a website blog, but also on their social media networks. Not being able to react quickly enough to the fast trending, changing topics in the industry. That's, again, a challenge. It's a manual challenge. Here's a big one, which I find really fascinating. There is an industry fear or an industry acceptance that if you use Gen AI created content, that it's going to be plagiarism of some sort. So even when we caught up with Romain, the solutions architect from Amazon, he was saying it's accepted by all these companies that there is plagiarism of some sort. Why don't you build into your product some kind of traffic light system that actually shows red if it's quite similar to some other contents, orange or green? Took that on board, it was a great idea, but we actually went a bit further and went, no, we can do this and make it without it being plagiarised. So that's one of our unique selling points that no one's done, so we can demonstrate that for you later on. And most importantly, the true example that I just gave you about my sporting clients, there's no true automation. It's just a very manual process. So they're the problems in the industry. So let's talk about the solution and what Syndica does. We'd like to demonstrate for you if you get a chance later on, but Syndica finds, collates the relevant articles, research trends and topics, so you can literally put in all the search keywords. You can say must include, should include, very, very flexible, easy to use from that side. takes all the data, creates a plagiarism-free, so that's that key point I said, we're actually plagiarism-free. So all these businesses, whether they be small sole trader through to a huge publisher, can be confident that what they're getting produced using the AI technology is plagiarism-free. The content is automatically structured and optimized for the different platforms, whether it be social media or a blog, does that in the tone of voice. And once your sources, templates, and the tone of voice is set, you can go to sleep, come back whenever you want. It's generating new stories continuously. You just have to review it, and if you're happy with it, publish it. So what's the key difference? Syndica, we're not writing another AI tool. We're not trying to do what all these 41 companies are doing and everyone's doing in writing AI. We're about fully automating that process that is currently costing companies a huge amount of manual resource and time and money, so they can focus on their business strategy, creativity, and growth. So thanks for your time. I'm going to hand over now to my co-founder and product director, Andrew Jackson. Andrew Jackson.
Hi there. Kind of out of time, so I'll just do this quickly. We've got an MVP. So AI it's not just the future, it's also the present. All right, the next 2 to 5 years, AI is going to change every industry. All right, the disruption is already happening. We have an MVP. Let me put this through. All right, so the ones that adapt, all right, will thrive. The ones that don't will fall behind. So we've got an MVP. We've tested it with the real clients. We've got a white label version already happening out there, running live, producing content 24/7. So we've done the groundwork. We've gone from 0 to 1. Now we need to go from 1 to many. All right. The opportunity in the market is $51.8 billion by 2028. So everyone that we have shown this system to loves it. All right. The MVP, everyone wants to use the commercialised product once we've got it there. We've shown it to one company that does SEO and SEM content for over 3,000 customers. So being able to partner with a company like that will obviously give us a lower cost of acquisition while scaling. All right, we're looking at raising, we'll go through this. Speed, so testimonials, these are some of the customers we're using with, or that have tested it. Channel 7, Mellors Ministry of Sport. Just quickly, sorry, need to get through. So the investment we're looking at this point, next, not going. Here we go. So we're looking for a $2 million raise. The $2 million is for building an exceptional team, commercialising the product, and scaling so we can capture market share at this critical point. Now, I've got 3 things to offer. We've got a team, an experienced team. Darren's got 20 years in the content industry. Mark, our CTO, has 25 years in building applications and running large IT teams. Myself, 25 years in starting businesses, and we've also done already done an IT startup and converted. The second thing we've got is a trend. All right, how do you make big money? You get in front of a big trend. All right, and AI is the biggest trend that has come along in the past decades. The third thing we have is a product. All right, the product is content automation, and it has a use case that has the ability for mass adoption. All right, so the 3 things we have, we've got an experienced team, we're building in front of a big trend, and we've got a product that has a definite use case with mass adoption. All right, if you would like to come and talk to us about this opportunity, we're easy to find, we're in the orange shirts, we'd like to see you. Thank you.
Thank you very much, Syndica team. And last but not least, I'd like to introduce to you Freddie Lindvall, who's going to introduce a concept that if we think about blockchain, crypto, or let's think about crypto as a concept. We've created now a currency effectively out of nothing. Well, let's look at something like data and why. Think big here for the opportunity in the future. Potentially we can commoditize data. So please welcome Freddie to the stage from Me2B.
Hey, we're Me2B. We are building a massive marketplace. We're building a massive data hub on scale, an app filled with hyper-personalized data, and of course it's powered by AI. I'm Freddie. I am a Swedish-Australian tech entrepreneur. I'm a third-time founder. I have successful previous exits, and I'm the co-founder and CEO of Meta. We're targeting two massive industries, telcos, brands and advertisers, which both are facing the same type of problem, very tough privacy data laws. They're just getting harder and harder every day. And to accurately target end users with consent and get that hyper-personalized data is just getting harder and harder by the day. So we said, why don't we use one of the largest commodities in the world, mobile connectivity and prepaid mobile data? Why don't we utilize that to create a real value exchange? Why don't we create a marketplace around that? So meet Maya. Maya is one of 6 billion users that tops up her phone on average 2.3 times per month. Maya lives in Indonesia, where 95% of the mobile populations are on prepaid solutions. Maya spends 9+ days on her phone. Scary but true. So we thought, what if we can build a marketplace? What if we can build a marketplace between all these users like Maya, telcos, brands and advertisers? And what if we can create a real win-win-win? So the concept is pretty straightforward. Maya goes into our app, she purchases prepaid mobile data. With consent, she shares all her preferences and all her personal data. The telcos, the brands and the advertisers, they get access to all that data, all of her preferences, and with consent. And in return, they give Maya extra mobile data and tangible rewards. And Meta, well, we sit in the middle and earn revenue from potentially billions of monthly transactions. Maya wants real value for sharing her personal data, which today doesn't exist on scale. Today, Maya can't monetize on her data. Maya is not just after another free coffee for sharing her data. Maya wants tangible rewards that she can actually use to top up her prepaid phone, or buy digital services and goods, or pay for her train ticket, or maybe pay for her utility bill. Telcos, well, they want to monetize on their users. But today they struggle because these users are churning 80%. The telcos are also very heavily regulated, which means that they have to compete. So they cannot go together and build a solution on scale. It's not economically viable for them to set up their own solution. Brands and advertisers, well, we know what they want. They want to target these users with consent, and they want to do it accurately on scale. But they're struggling to find platforms like this to actually find these users. So Meta, again, we provide a massive marketplace, a value exchange on scale, where everyone creates a win-win-win. So for end users like Maya, telcos, brands and advertisers. We're all about emerging markets. We're starting with Southeast Asia. We have one key partnership integration that provides us access to a massive distribution platform with the access to 900 telcos and 5.4 billion users. And additionally, we have made a revenue share model with the telcos to incentivize a faster and a quicker user acquisition push. We're pretty proud of Meta, and we really believe in it. But what's even more cool are a few of those tech giants. I think you know some of them. Salesforce, Magnite, D1, some of the best tech companies in the world. Well, they really believe in us. We bootstrapped the business. Our friends and family oversubscribed in just over a month. We've secured $1 million in capital. We've partnered with world-class partners. and we're currently raising a pre-seed round to help us scale. With my previous exits, I've also had the fortune to be an investor. So I've invested in over 10 startups. I'm on a lot of advisory boards and regular boards, and I've probably evaluated several hundreds of startups. So I know what a lot of you are thinking right now. All right, this is a big play. Huge play. He's talking about 6 billion users, 900 telcos, the world's biggest brands and advertisers. Sounds a bit too big to be true. A startup pulling this off? Well, come and talk to us. And we'll explain exactly how we're going to do it. We have the backing from some of the world's biggest tech companies in the world. They believe in us, so maybe so will you. Thanks for taking the time to listen.
Thank you very much, Freddie, for closing us out. And that concludes the Startup Nerds today. So thank you very much to the presenters. Thanks to the audience for your attention. And lastly, thank you to Wholesale Investor for giving us and these startups the opportunity. We wouldn't be here today on stage without you. Thanks.
Hello, my name is Andrew Waters. I'm the Chief Executive of MyFarm, and it's my pleasure to talk to you today about the attributes of investing in the primary sector in New Zealand and investing with MyFarm. The firm was formed some 34 years ago by farmers for investors that have probably been farming within 1 or 2 generations and understand and like the attributes of investing in the primary sector. Grant Ryan and myself are still farmers, and through the first 20 years of the firm's time, we invested heavily in the dairy sector. In the last 10 years, we've been investing more broadly across the agri sector, the best of the agri sector here in New Zealand. We have focused on subsectors that can provide attractive risk-adjusted returns for investors. Our assets are real assets, they're less liquid, and we think we need to deliver a margin above the risk-free rate, or the return you can get from money in the bank, of about 4%, where we've got lease-backed investments, and more like 5, 6, 8% when we're taking on some operating risk. So we're looking for sectors that have that sort of level of 8 to 10 to 12% return. And then we're also pitching ourselves forward 5, 10, 15 years into the future and thinking about, is that competitive advantage, is that sort of return level going to survive into the future? The result of what we do is that our investments are very unique to New Zealand. For example, we are the kiwi fruit capital of the world. That's a very uniquely Kiwi product. It's the highest growth sector in horticulture and in agriculture overall. And if you want to get exposure to that sector, you've probably got to invest in New Zealand and possibly have to invest with MyFarm. There are also another set of products that we're currently offering, carbon and production forestry, based off high growth rate of trees and a very positive regulatory settings around carbon here in New Zealand, chicken facilities, and distributed solar within a renewable energy network. Land-based assets are typically less volatile than, say, shares, and from the research we've done, the returns are unlikely to be correlated with shares and bonds and so forth. So the investments sit well within a diversified portfolio that you might want to hold. It goes without saying that New Zealand is an open economy. We don't have subsidies, we don't have tariffs, our tax rates are moderate, no capital gains tax. So that's a very positive investment backdrop for our sector. We have a format of thinking about investments, which is based around investment attributes. That's looking at product, and then investment focus, which is about considering your needs. So we have sector, model partner, and property attributes that all have to combine for us to offer an investment to you. And then in terms of investment products, we're not an investment advisor, but we do have defensive growth. And then for those that want a sustainability, energy transition, natural capital angle, we have that as well. So when we're thinking about sectors, our first point of call is profitability. Are the good operating margins being delivered, which will sustainably provide free cash flow, and also some resilience in the event of market disruption or climate type impacts? We're also thinking about the denominator. We've got our returns over an investment. So is there a required rate of return being driven from an investment? Where are we at in the property cycle? And are we getting that 8 to 12% return for you? And then with that sustainable competitive advantage, kiwi fruit, it grows very well here in New Zealand. We've got a terrific SunGold variety, which is protected by plant variety rights, i.e. like a patent. And then we've got Zespri, which is world-class sales and marketing monopsony or single desk seller, which is a real benefit for us. In terms of models and partners, we're looking for the best risk-adjusted return. So where it makes sense, we'll adopt a leasehold where our lessee is adopting a production and price risk. But sometimes it makes sense for us to go up the value chain, have some operating risk or take on some development risk because we think we can control those relatively well. In terms of operating partner, we're looking for people that can operate our orchards. They've got track record, they've got aligned vision and purpose and values. They've got, and they're providing a competitive rate of return for our product that we're operating with. And then finally, it comes down to property. Have we got the right quality in terms of soils, contour, climate, potentially infrastructure such as irrigation if it's an orchard, and do all those things align to ensure that we've got the right sort of risk return profile. So those three things combine into what we think is a very robust investment format. From your perspective, we have some focuses, and you can kind of select from some of the products we provide. Long-term leasehold assets with leases that adjust potentially with inflation, provide a good income base for you. It's quite a defensive asset. A good example of that is chicken facilities where we're partnering with New Zealand's largest poultry producer. We've got biosecurity protections on chicken imports here. We're very protective of our fauna here in New Zealand. And so that makes a really great basis for a defensive investment. When we think about growth, we take on some more risk, but we see some upside. So lease and profit share, good example is the Kiwi Fruit Fund, or in fact, you're welcome to have a look at our Sequest Forestry Fund, where we're looking to invest in both carbon revenues, forestry revenues, and we've got some really good risk mitigants with being able to sell carbon forward, being able to sell forestry rights, etc. About half of our investments by land area are actually in the sustainability energy transition part of the sector. We've got the solar fund. Solar and hydro work really well together. We're working with a green hydrogen producer, very good returns, a lot to like. So yeah, forestry, manuka, where we can see some environmental benefits, but have some sustainable and sometimes dual income streams. There's a lot to like about those investments. So look, this is just a quick snapshot. We've got deep investment experience. Certainly the team here are very motivated to provide you a good experience, a good return. We've got these sector opportunities that you can look at and consider from time to time. And we really look forward to engaging with you on your questions and providing you some really high quality investment opportunities. Thank you for your time.
My name's Clive Mayhew. I'm the co-founder and CEO of Golf.Ai. Our head office here in wonderful Sydney, Australia, but we have people all around the world. So I'd like to give you a little understanding of what we're building at Golf.ai. We call it Golf Intelligence. And for the next 2 to 5 years, you're going to see AI in the business world really being an integral part of everything we do. And I also believe that AI will also be the same in all of our passions and sports that we entertain. And Golf.ai is designed specifically to be the golf intelligence in the golf market. So the problem we're solving, golf needs a new interface. AI voice is the answer. Like most sports, golf has got a huge amount of data and different data sources that people use. And typically, a lot of it has been digitized over the last 10 years. However, it's using what I call as version 2 apps, which are very, very confusing to use and also quite complicated to use. So here specifically, we have 4 areas. Booking tee times is very hard. Golf rules are very confusing. Course strategy on the golf course depends on guesswork. And all the current golf tech is really using little screens and very fiddly to use. So AI voice is the answer. Let's start with tee times. Tee times is a $20 billion market in the US alone. So every year, $20 billion is spent on booking tee times for golf courses. The AI interface radically changes how easy that will be and also reduces the complexity to the golfer of booking the tee times. So let me share an example. Here's a pilot we're running in Dubai with 3 of the largest golf courses, Emirates, Jumeirah, and Dubai Creek Golf Club. The customer would ring the telephone number, or he'd speak to chat via WhatsApp. And literally, they would say, I want to book a tee time in Dubai for April the 15th for 4 players. What's available? And then our AI agent would go out to the back, find the tee times, and literally say, on the 15th of April, 11:10 is available at the Emirates Golf Club. Would you like me to book that for you? The consumer just says yes, and then we send a booking link for them to book their tee time. Extend this going forward in the next few years. Not only is tee times used for booking your own personal tee times, but when you go on golf trips, the golf trips, again, is a very, very significant market. It's a $10 billion market worldwide. You want to book a golf trip, not only do you book your tee time, you maybe want to book your hotel. You maybe want to book your actual airport transfer, or even your actual airline flight itself. So all that is possible with our AI tee times going forward. We start with tee times, we add other services, and we make it a complete service for you to use. Tremendous opportunity. Golf rules, the heart of Golf.ai. Golf rules today, typically less than 5% of golfers actually understand and play to golf rules. So there's a huge education required for people to use golf rules on the golf course. Our AI assistant is basically, you just talk to it and it answers a golf rule. You could talk to it in 29 different languages. You could talk to it via just a simple telephone call. You can use WhatsApp, or you can go to our website. It is absolutely changing how people play golf using the rules. When you're on the golf course and you're walking around, typically today, there's many different GPS apps. And people use these apps. So today, they're being used by over 50 million people. And the experience is something like this. You pick up your phone and you look at a map of the golf course, and you actually touch the screen to identify how far away you are for your shot. Well, Golf.ai's AI Caddy changes all of that. It literally is an AI interface that talks to you as you go around the golf course. So I'm on the first tee at the Links Golf Course. It'll say to me, Clive, the shot ahead is a par 4. It's a challenging par 4 with water to the left and bunkers to the right. With your driver, you hit this 215 meters. Therefore, we'd recommend you try your driver and just play to the left of the bunker, for example. So the AI conversation is literally using the GPS points and talking you around the golf course. Personalized geolocation, never been used before. The world's first using AI today. We launched the AI scorecard for the two main golf pro tours in the world, the PGA Tour and Live Golf. And what this is an interactive AI analysis of the professionals golf round. It's really is a pioneering next-gen media UX. Already it's been adopted by Australian Golf Digest as part of their homepage. And we're talking to many other golf media partners about them taking this technology. So you can see here, Golf AI's revolution starts here. B2C, AI Caddy, AI Tee Times, and AI Media. And then obviously our B2B is taking those services and providing services for our booking partners, the golf courses, and APIs into future. We're a proven tech team. Myself, the founder, 25 years as an entrepreneur. I've built and sold 6 different software companies. Originally, I started at Netscape. This has been my passion project. I love it. I'm a big golfer. I'm really here. I'm really enjoying every second of building this company. Peter's a co-founder, CPO, AI guru, doing a great job. Mark is our outsource partner, access to 50 different development resources. And then we have our AI advisor, a gentleman called Steve Nuri, who is from UNSW, an Australian who now lives in Dubai, one of the world leaders in AI and generative AI in particular. So our roadmap over the next 18 months is we're just getting bigger and bigger and bigger, developing more and more services, getting more and more users. We just launched in Europe. We have a general manager in Europe now. We'll be launching in America with a general manager, Japan, and around the world. Already we have over 2,000 users using our AI Caddy, literally in over 50 countries already. Our revenue stream is a combination of subscription and B2B revenues. Our forecast is to take this business to a 12 million revenue by 2029. As you can see, first year is 400,000, it's just growing from there. The use of the funds is pretty much development and marketing. We're trying to get to 500,000 users, 200 course partners within that time frame. And again, remember, it's multiple revenue streams. So Golf.AI is about intelligence. AI is the future, and we're going to lead this in the golf space with all of our AI intelligent products. Thank you very much.
All right, good afternoon, everyone. Obviously, some really exciting equity investments there that can be made. We're going a little bit more vanilla with some debt investing now. And obviously, look, private credit's been growing at a pretty rapid clip in Australia in recent years, and we've been there for 8.5 years in the sector. And most of the team who are here today are out of the banking sector. So I think we've seen some interesting press in private credit. I think there's been a really strong focus on returns, and now we're starting to see the shift into what risks you're actually taking to generate the return, which we're very happy about because as a team coming out of the banking sector, we are used to measuring risk, quantifying it, and obviously disclosing it to our investors. So as a business, we started 8.5 years ago. My background, I was at Macquarie Bank for 11 years before rolling out to start this business in a joint venture with Aura Group. From a standing start, we're now managing over $1.1 billion in assets. Our wholesale fund has returned 9.63% per annum since inception on a compounding basis. And while doing that, we've retained a $1 NAV. We've also been the top performing fund in APAC for 22, 23 and 24. And what they take into account there is not just your outright return, but also your Sharpe ratio, growth, etc. Back to the team. So there's a team of 7 of us within Aura Private Credit and over 61 years of experience there. So what's the thesis? And look, I think we heard a little bit about this with the FC presentation earlier. Australia's in a really nascent stage with private credit. So if you look at Europe and the US, they're markets that are very mature. So over 91% of lending is done in private markets in the US, so 9% in the banking sector. 65% in Europe is done privately, whereas Australia, 9% of lending is done in the private market. So you can see when you look at those global peers, we've got a very long way to run in the Aussie market. The other point to note, and this was something that was really fundamental when we started up the business, is the funding gap. So post-GFC, Australian businesses in that SME to mid-market corporate space have had reduced availability of capital. That's a real problem. The SME market employs over 70% of our workforce, and as seen during COVID, it's really the backbone of the economy. So what we're looking to do is raise capital and deploy that into Australian business lending, and we do that through what we see as best-of-breed Australian business lenders. We've screened a significant number, coming up on 200, and we're funding 8. Now, our core objective as a team is to preserve capital. So, unlike some of the VC investments, which will provide you a 10x potentially, we are there to have stability of your capital. That's our core objective, and then provide an exceptionally strong risk-adjusted return. And in doing so, we've returned over 9.66% this year and 9.63% with no capital volatility since inception. And one thing I'll note is we do impairment test the portfolio on a monthly basis, and that is audited by EY. So we adhere to the accounting standards on valuation. Now, one thing we didn't do, or we didn't set out to do when we launched the vehicle, the wholesale vehicle, was to compare ourselves to equity markets. But fortunately, our performance has been strong enough that we've actually exceeded equity markets for the majority of our life. So if you look at the ASX 200 on an accumulation basis, we've basically matched the returns there since inception with no volatility. Now, the other proxy that you'd be looking at within your portfolios is either fixed income, general fixed income markets, or your high yield index. And as you can see from when COVID kicked in back in February 2020, fixed income markets, particularly in that high yield space, came back significantly and have not really recovered. We've been able to sort of truck through that. Now, the next thing is just that consistency of return. So what investors should look at with our asset is a vehicle where your objective is limited movement in your capital base and then that monthly income. So we see our assets as being pivotal or a real core for particularly superannuation funds or retirees who are looking at income within their portfolio. Or for younger investors who are looking at building out their portfolio, this is a real growth engine where they're able to fund capital calls in VC funds as an example. Now, one key differentiating factor in what we do, we're very much focused on diversification. So it's a spreading of risk across a broad number of industries, geographies, and loan types within our portfolio. So we've currently got exposure to over 13,900 loans within the portfolio. So if you're looking at a lot of other private credit providers out there, they'll have fairly lumpy portfolios. What we're very much focused on is spreading that risk. So one of the biggest risks we see in all credit markets is sort of deep, prolonged recessions and the impacts that will have on a business's cash flow. When you spread that risk over a broad variety of industries, geographies and loans, you mitigate a lot of those risks. Now, the other thing we don't do is property development. You'll see there we do have exposure to the construction sector. So our industry splits are based on ANZIC codes, so that's the ABS codes. And if you look at construction, it's a very broad category. So it'll take anything from your local plumber through to Lend-Lease. What we do with the construction lending that we're completing is predominantly property backed, so that's a completed property, not under construction as your security. 95% of our construction exposure is property backed. Now, the other thing we don't do is unsecured lending. So we have some form of security on our lending. So that'll be general security agreements, personal guarantees, property, assets, invoices, livestock. We do legal disbursement funding also. We're very much agnostic on the loan type. So we're currently funding 8 lenders in market. So as I said earlier, we've screened over 200 and we've funded 8. So a circa 4% hit rate on what we'll fund. We're very selective, and as I said at the front end, we are not here to provide you a teens plus return. We're here to provide a 9 to 12% return, and our target is to provide capital stability there. Now we've got a very robust analysis of lenders. We look at it from 2 main lenses. One, what characteristics does that business have? How well capitalized they are? What's board composition? The players, so the people within that business, are they well qualified? Do they have a credit background? What has their track record been like? And then we look at a more fundamental credit analysis, looking at their risk policies, procedures, and we build a lot of portfolio parameters to protect capital within a structure. So one of the key benefits of warehouse financing, which is what we get involved in, is that the lender will always have some skin in the game. So that'll be their NIM, their fees, their equity capital at risk to a level. Now, one key differentiator with respect to warehouse financing versus direct lending is you do not get that layer of protection. So you'll see direct lenders out there who will deliver you a higher return, but they are missing that critical layer of protection that we have in our warehouse facilities. And then looking at risk, so once again, taking that bank lens, we've actually engaged for $250,000 a year, we've engaged an external party to assess each of the 13,900 loans in our portfolio from a default perspective. From that point, we run over 1 million simulations on a monthly basis across those loans and derive a loss given default. So what that comes out to is within the Aura Private Credit Income Fund, an investor could expect a negative return in 7 in every 1,000 years. Now, to put that into some context, in equity markets, an investor would expect a negative return in 1 in every 4 years. So just looking at that volatility measure, it's fairly different. And if you bring that back to a public market sphere, coming out at a current BB level, and look, as a team, we've got an objective to push that towards a BBB internally. So looking at it from a risk-adjusted returns basis, we're getting outsized returns when you compare that to public markets with monthly liquidity, monthly income. So a key differentiator in what we do. So if you have any questions or if you'd like to invest, please get in contact with us. You can contact us through the Wholesale Investor platform or directly with our team members. So thank you very much for your time. Have a great afternoon.
Profinder Healthcare is revolutionizing how clients connect with home care providers in Australia through our AI-powered marketplace. We are seeking $1.6 million in seed investment to transform the $20 billion Australian home care sector by solving critical marketplace inefficiencies. Our platform benefits both providers struggling with inconsistent lead generation and clients overwhelmed by the search for quality care. The Australian home care market presents a tremendous growth opportunity, currently valued at over $20 billion with 15% annual growth. With 3.8 million Australians over 65 and projected to reach 8.8 million by 2057, demand is rapidly increasing. Currently, 1.3 million Australians receive formal home care services from over 4,200 provider organizations, creating a substantial marketplace for our solution. For clients, finding suitable healthcare providers involves wasting hours searching with no standardized way to compare options or assess provider quality. The booking process is frustrating with no immediate confirmation. Providers face equally challenging problems: unreliable and expensive lead generation, excessive administrative time spent on client acquisition, privacy concerns when sharing contact information, and small providers struggling to compete with larger agencies. Our solution, Profinder Healthcare, solves these problems through 4 core innovations: intelligent matching that connects clients with appropriate providers through a single form, a competitive marketplace where qualified providers submit offers based on real-time alerts, a quality-weighted ranking system that prioritizes providers based on client preferences, and a real-time availability tracking to ensure providers only receive leads when they are actually available. Our technology centers around three key innovations: our intelligent care matching algorithm that uses AI to match based on comprehensive profiles and optimize for location and specialty care needs, our Q-factor rating system that provides multidimensional quality assessment beyond basic star ratings with verified reviews, and our automated end-to-end procurement system featuring one-click booking, secure payments, and digital service agreement management. Like static directories, Profinder offers a true home care marketplace with dynamic matching algorithms and end-to-end service journey management. Our quality-focused metrics go beyond simple ratings to include outcome-based indicators and verified client reviews with response mechanisms. This creates a platform that delivers real value rather than just listing. For clients, we reduce provider selection time by 90%, enable better decisions through personalized rankings, provide quality confidence through verified service experiences, and offer a streamlined process on one secure platform. For providers, we deliver high-intent leads for specific services, a pay-for-performance model, privacy protection, and quality recognition that positions excellent service providers prominently. Compared to competitors like Mabel, Profinder differentiates through true marketplace functionality versus a basic directory, with dynamic matching algorithms creating an active ecosystem. Our healthcare-specific intelligence is trained specifically on provider-client matching patterns. We offer an end-to-end experience with integrated payment, verification, and booking systems, plus an alert-based system ensuring qualified providers can compete fairly. Competitive differentiation. Profinder transforms healthcare matching with 4 key advantages over market leader Mabel as shown. The result, 90% faster matching, higher quality connections, and lower fees, 8% versus Mabel's 10%, creating superior value for both clients and providers. Our 3-phase launch begins with development and beta in Q3, Q4 2025, recruiting 50 to 75 initial providers. Phase 2 marks our official Australian market entry in Q1 2026, targeting Sydney, Melbourne, and Brisbane with 300 providers and 5,000 users. Phase 3 expands to all major Australian metropolitan areas in Q2, Q3 2026, adding telehealth integration and specialized NDIS service modules. We have established clear metrics for success: provider acquisition costs under $300, client acquisition costs under $45, provider retention rates above 85%, month-over-month transaction growth of minimum 20%, and 15% market penetration in launch cities within 12 months. These benchmarks will ensure we are on track for sustainable growth. Our financial model shows strong revenue growth with expanding margins as we scale. We anticipate achieving profitability by late 2027, with EBITDA margins expanding significantly thereafter as our marketplace reaches critical mass and operational efficiencies improve. Our financial trajectory shows exceptional growth and profitability potential. Most importantly, for early investors, our cash position remains positive throughout, growing to over $17 million by year 3 without requiring additional funding rounds beyond Series A, maximizing returns for seed investors. Marketing strategy centers on highly targeted acquisition of both sides of our marketplace. Our customer acquisition flywheel accelerates as network effects take hold, with each new client and provider increasing platform value. Our operating expense structure reflects disciplined resource allocation with 4 primary categories. This balanced approach enables us to achieve significant operating leverage as we scale, with expenses growing at just 40% the rate of our revenue growth by year 3, driving our exceptional EBITDA margin expansion. Beyond our initial home care focus, we see substantial expansion opportunities in allied health services, childcare services, home maintenance and modification, and mental health support services. Each represents a natural extension of our platform capabilities. We are raising $1.6 million in seed capital, offering 25% equity at an $8.8 million pre-money valuation. Investment will be structured as preferred shares with liquidation preference and anti-dilution protection, though we'll consider convertible notes or SAFE. The investment will be strategically allocated with 48% to product development to complete our platform, 23% to marketing and customer acquisition to build initial traction, 17% to operational costs, and 12% to administrative expenses. This balanced approach ensures we can build, launch, and scale effectively. We've established clear financial milestones. These projections demonstrate our path to significant investor returns. Attractive exit options in a 3 to 7 year time frame as shown. Our founding team combines deep domain expertise with technical innovation capabilities. We invite you to join us in transforming healthcare provider discovery. Our investment relations department is available at this number, or you can also contact us via email at this email address. We welcome your questions and look forward to discussing how you can participate in this exciting opportunity to revolutionize healthcare provider discovery in Australia and beyond. Profinder represents an exceptional opportunity to transform healthcare delivery while generating strong returns. The Australian home care market provides an ideal launching point with strong growth dynamics and acute pain points our technology addresses. We welcome your questions and are excited about partnering with investors who share our passion for